Good morning, everybody. It is Friday. Really excited to see everybody, to hang out with everybody. Man, oh man, what a week it's been. What a week it's been. I actually was laughing right before I came on. I got something to show everybody, and Hollis is going to go crazy when he sees this. What the? I just have a power surge? I think I just had a power surge. Anyway, thank you. Rusty was first. Jets dad. Joni. Shells be slacking. Slacking. Thank you, everybody, for being here. Big Dog Jello. Happy Friday to you, too. Russell, how are you? Nepius, how are you? Listen, I'm not even going to touch that one, Ocean. Not even going to touch it. Very excited to show everybody a few things. It's a wild day in the markets. Wild week. Let's get into it. And I'm waiting until I see Hollis for show and tell. We wait for Hollis for show and tell. So Hollis can either put a comment in or he can text me that he is here. But we cannot do show and tell without Hollis. Oh, he's here. All right, he's here. Hollis, are you ready for show and tell before we get into stocks? Tommy Dimes, I know you're itching. But I want to make everybody laugh, okay? So how do I do this? Okay, I can do it like this. Just let me make sure that none of my personal information is showing. It's not great. So Hollis, in 2 days, I want you to focus on this number, buddy. Oh, I can't even blow it up. I want you to focus on this number. In 2 days, I used 121.3 million tokens. And my peak tokens was 95.3 million in 2 days with OpenAI. What do you think of that, Hollis? Am I token maxing or what? 2 days, 121.3 million tokens. On the 23rd, which was yesterday, I used 95.3 million tokens. Addicted to trading. What's going on? I mean, is that a lot? I don't know. Your credit card maxing. Oh, boy. No, you didn't. Believe it or not, it actually, OpenAI is so generous. I got to tell you, I only used 82% of the monthly plan in 2 days. 82% of their monthly plan in 2 days. And you want to know what I'm annoyed at? Anthropic, by the way, sent me a message in the app that I'm 80% of the way done. It's like, you guys have my credit card. I already put it where you just charge me. Like, don't message me, please. That shit annoys me. Anyway, Hollis, are you ready for what I built? And everybody, are you ready for what I built? Chris is going to come on in a little bit. I am sure that I will get into it when he is here. So I built a newsroom for myself. And yes, I am agent maxing with the newsroom. And it's actually really cool. Hollis, I'll throw you on the distro list. So I built my own newsroom. I have all my subscriptions in here, gathering data. 408 data points / articles were ingested. I have a team of agents, market tape, economy and consumer, Fed rate and policy, AI labs and software, hyperscaler deal book, semiconductors, data center infrastructure, earnings desk, energy and commodities, global policy. Then I have a whole team of editors, fact checker, section editors, and an editor-in-chief. So I built my own research team, and it basically runs an entire pipeline, and it builds me out a morning briefing. And I hooked up a dummy email account, and it emails it right to my inbox. Rusty, thank you so much. I really appreciate it. What you can do with AI is incredible, ladies and gentlemen. I can't even begin to tell you. What you can do with AI is absolutely incredible. I am also updating nowflation.com. I had an epiphany last night. Maybe not an epiphany, but you know what? No, Hollis, that's a great idea. I do not. I guess that's the next thing I do. Figure out how to have OpenAI hook into WhatsApp for Cactus Jack's channel. That will be a project for this weekend. Thank you, Hollis. Appreciate that. I will make that a reality. But I am making some upgrades to nowflation.com around oil. I am currently on the other computer building out a full-blown oil tracking system with the monthly production numbers and the average daily barrels production. And I'm going to aggregate all the data. It's going to be pretty cool. So phase 1 has shipped. Phase 2 is currently building. We have 4 phases I got to build out, and then I got to look at it, see if I'm happy, and make some tweaks. But it's going to be really good. So nowflation.com is going to get even bigger. So, and it's going to be free for all of you to use it. Now, let's get in to markets. Let's get into the economy. Let's get into a lot of things. The real-time reading on Nowflation dropped 3 points. It was 2.07, 2.04. Next CPI print is in 18 days and 20 hours. And my Nowflation reading is saying we're going to come in at 3.39%. We'll see what happens. We will see what happens. Stock market. ServiceNow got dinged for the wrong reasons. Nostradamus Chris called it. You know what? He took some shit on day one of it, but it's looking like he made a damn good decision. Look, I think McDermott did great. I think that Now is a great company. I think it's going higher. My own personal opinion. Wix, Salesforce, 163.20. IBM starting to catch a little bit of a move. We're still a ways away. Verizon up 3.5%. Reddit 172. Netflix 70. The Uber 69.98. VC properties. I happen to like VC a lot. 26.70. Good read. Google, the googly moogly, 321.80. Coca-Cola, 82. Zeta trying to get back to $20. Realty Income, one of my favorite REITs, 65.38. We got TKO Group hanging out around 180. Microsoft, 385. We also have SoFi, 1678. If this falls, so the website that is public is nowflation.com. I will put it in the chat. So this is free for everybody. Jake Rizzo is here. Thank you, Jake Rizzo. So this site is free for everybody. Not sure what else I will put out, but this site is free and is starting to get updated. So we got Take-Two, 231, Palantir, 124, Meta back over 600. We're at 609. Cisco, Tommy Dimes' favorite company, 113. NVIDIA, 209.57. We're rolling into the big week next week. Big week. CrowdStrike, even keel. Amazon getting hit, 233. Strategy back down to 93. Back and forth we go. Oracle, 118. Maybe I'll buy a little more today. AMD should be up a ton in my opinion. Qualcomm's getting even cheaper, and it's getting where I want it to get to start a position. I'd like to get a 155. I'm cheap as hell. We'll see what happens. Broadcom, I think, should be up. It's a 385. It doesn't make sense to me. Taiwan semi down $8, no good. Tesla is going lower, in my opinion, ladies and gentlemen. Tesla's going lower. Intel, 97. Really good quarter. Down a little. Now, here's the big thing. Crude is down, 87.91. We're going to get into this in a few minutes. Micron, 937. Hood, 95. CoreWeave getting smoked, 75.37. Nebius getting smoked also, 203. Look, I actually need more shares of CoreWeave, so I don't hate this. I would actually like to acquire more, so I really do not hate that. And we're just going to roll into it. $797 billion came out of the Mag 7 during yesterday's sell-off. Can you believe that? $797 billion. The Trump administration moving to collect duties, 10% to 12.5% on imports from most trading partners, with the reporting indicating 60 countries will be affected. We got South Korea falling, market falling. Prior U.S. close was 74.08. Intel Q2 sales, $16.1 billion, 25% year-over-year increase. Incredible. European Commission issued preliminary findings against TikTok under the Digital Services Act, widening the EU's enforcement campaign against major technology platforms. That has real implications for Meta, unfortunately. Now, Brent and oil, let's just get into that. Brent reached 100 yesterday as the Middle East conflict intensified. It raised the immediate concern that energy costs could sustain another inflation impulse. We could see it. I did see SAP. We'll get to it. It's on my list to talk about. Thank you very much. Dre the General. I did see it. Now, the oil move matters because higher fuel costs reduce household purchasing power because it squeezes everything. It also impacts corporate earnings on margins. Transport and industrial margins get hit. And it can keep central banks cautious even if growth slows down. I'm not happy about it at all. And while oil is down a good amount today, I'm worried about the world we wake up to tomorrow and Sunday because the markets aren't open. If a large-scale attack happens, I don't know. We'll see what happens. I think it's going to go higher. Now, President Xi and Putin has assured Trump they won't sell arms to Iran. I got to tell you, to me, the fact that Trump is even making sure of that, I would have to say that this weekend is going to be brutal, unfortunately. I really hate to say it because, look, there's a lot of innocent civilians over there, regardless of what anybody thinks. We're talking about a lot of children are going to be impacted, and I don't want to see that. I just don't. And unfortunately, I think he's going to hit power plants. Don't want to see it. But you don't go to President Xi and Putin to get assurances that they're not going to arm Iran or take sides unless you're planning on doing something. That's how I'm reading into it. So we're going to have to see what happens with oil. I'm very scared. Today could be a head fake on oil going lower. Unfortunately, that's the world we live in. The administration, let's talk about this. They're moving to collect duties, as I said, 10% to 12.5% on imports. The measure is using Section 301 of the Trade Act of 1974 and is framed around forced labor enforcement after the prior broad tariff framework was struck down. They're finding a way to get around it. Now, the reporting identifies exemptions that include many things. Energy will be exempt, fertilizer, pharmaceuticals, certain food and agricultural imports, which may reduce the immediate inflation effect in those categories. For importers, the issue is higher landed costs, sourcing uncertainty, and the possibility of either absorbing the tariff through the margins or passing it through the consumers. We'll see what happens, but there's a reason that those aspects were excluded. And look, there's a bull case to it, and it's that moderate rates and exemptions limit the economic damage. The risk is retaliation, legal challenges, or wider pass-throughs that add to goods inflation. I don't know what's going to happen. I don't know what's going to happen. But I think they're very serious about this. We lived through Liberation Day. We lived through everything else. We'll live through this. Why do you want me to do cosplay? You want me to start buying costumes and dressing up for the streams? I don't get it. Matt G, 20% not looking so bad right now. Plenty of dry powder. I'm with you, man. I am with you. Yeah, I didn't buy anything this week. I do have to make a purchase for... once again, I don't know what this means. Lilo Dallas Multipass. Why do I want to say that this is from Fifth Element? But it's not. His name is Corbin something, right? Multipass is from Fifth Element. Yeah, Fifth Element. Yeah. Multipass. I'm with you. Don't say I don't know movies. I got on the first try. I didn't have to type anything. Fifth Element. I know Multipass. Lilo Dallas. Oh, is his name Dallas Corbin? I thought his last name was Corbin for some reason. And Corbin Dallas. There you go. Corbin Dallas. Yeah, Fifth Element's an amazing movie. Fifth Element's an amazing movie. I wonder if Amit, have you seen this movie, Amit? I would like to know. And by the way, check your email. Classic movie. That means he hasn't seen it, ladies and gentlemen. That is code for shut up, I haven't seen it. That is absolutely code. All right. I'm not going to say that I'm worried about Meta right now. I am very annoyed at Europe. Europe widened its technology enforcement push with their preliminary findings against TikTok. The European Commission has announced preliminary findings under the Digital Services Act focused on the safety and privacy protections surrounding teenage users. The Commission has indicated accounts for users under 18 could be readily found and viewed by others, while teen profile pictures remained accessible even to people without a TikTok account. Now, TikTok defended its teen account design, saying its privacy and safety settings had been vetoed by experts, so the proceeding remains unresolved. The case reinforces that EU regulatory risk is not confirmed or confined, okay? So for Meta, this is not good. It goes hand in hand with the latest lawsuit they have in the States. They lost two preliminary ones a couple months ago, and we could see tighter scrutiny. And keep in mind, Meta has a lawsuit that is the entire market cap of the company. Is that going to happen? Absolutely not. But are they going to lose? Maybe. And the European nation is getting a little crazy with things, but this is real and this is a risk to Meta. Absolutely. And my own personal opinion is kids shouldn't be on it. And I think it comes down to the parents, and it comes down to the parents are the ones that are ultimately responsible. Maybe they're going to have to make it where you have to upload your ID. I don't know. Meta has to take this very seriously. We'll see what happens. I'm hoping that this does not get discussed on the conference call. I don't think we need to add fuel to the fire. We shall see, though, because you know what? This would have very serious implications. Now, Intel, $16.1 billion in Q2 sales, and gives an above consensus outlook. The $16.1 billion is up 25% year over year, better than expected. It's pretty incredible, actually. The forecast for Q3, September quarter, $15.8 billion to $16.8 billion dollar spread between the two. The street's only looking for $15.1 billion. Really good. Intel is really turning it around. Data center revenue. This is a key statistic. It grew 59% year over year, driven by demand for CPUs. And it matters because it shows the AI infrastructure build out is supporting demand for broader compute capacity. Not only the accelerator chips that have dominated the AI investment cycle. The constructive case is that sustained server demand could support Intel's operational turnaround and strengthen its effort to rebuild domestic semiconductor manufacturing capacity. Don't forget, from a national security standpoint, we need more fabs. Intel is a major player in that. The risk is that Intel must still execute on manufacturing and manage substantial investment needs. They still are competing with AMD and NVIDIA and other customers developing their own chips. They'll be absolutely competing with Qualcomm over the next several years. And I'm going to stop what I'm saying to answer a question. Favorite Italian restaurant? There's a couple. Right now, it's still Carbone, and I know that's a controversial take. I think Carbone at ZZ Club is the best dining experience I've had, and I think Carbone down in the Village is the best meal I've had at a restaurant. I really do. I will defend that. I will defend it. I will defend it. It is incredible. But there's a tremendous amount of great Italian restaurants in New York City and out on Long Island. Tremendous amount. Angelina's, Matteo's. I mean, there's so many. Mastro's. So many great ones. Scarpetta. But we'll get back to stocks. Nobody wants to hear about Italian food. Now, the key items that I'm watching: Intel's next data center update, gross margin trends, capital spending requirements. I want to see the progress on Foundry. That's what I really want to see. The progress on Foundry. We know that the demand for chips is going to increase. Anybody who watched the AMD conference yesterday, anybody who read through or listened to the conference call from Alphabet, we need so much more demand as compute scales. Intel could be in a really good position. Is it expensive? Yes. But from a strategic standpoint, I think it's very important to national security, especially when you think about the supply chain. I happen to really like Intel. I just don't like the price here. But I think it's going to be good. Now, SAP, somebody thought I didn't see it. Of course I saw it. Cloud backlog. I mean, SAP, does anybody look at SAP for cloud backlog? It grew 26%. Okay. The current cloud backlog grew 26%. Shares are up. And it matters because it provides visibility into contracted or committed enterprise demand that can support future reoccurring revenue for SAP. And it's not a hyperscaler. Who would have thought this from a non-hyperscaler? SAP has introduced a software suite combining data, cloud, AI, and automation features, positioning the company to sell AI capabilities through its existing enterprise relationships. And let me tell you why that's important, okay? It is important. Jet's dad, that's funny. Sometimes I feel like I gotta turn the chat to the side on my screen because I just start laughing. You guys are the best. Thank you for being here. I really appreciate it. This is important because SAP is one of the largest ERP systems in the game. You do not run corporate infrastructure without SAP, Workday, or Oracle. And when I say corporate infrastructure, I mean back office services. Oh, shit. Tay's in the house. So, crazy story. I'm going to the studio to go meet up with Amit. I had sunglasses on. I think I was walking up Park Avenue, ran into Tay, and we talked for a couple of minutes. I mean, guy was super cool. Crazy that he recognized me, especially with the sunglasses on. Thank you for being here in the chat. Really appreciate it. You were so kind yesterday. Thank you. Absolutely awesome. Now, with SAP, they run everything. And you guys are funny. SAP, Workday, and Oracle are the backbone for back office services. You run your payroll through it. You run your expenses through it. You run your HR through it, your procurement, your accounts payable, your accounts receivable, your budgeting, your variance, your learning and talent. So much gets run through this. SAP is a prime vendor. Joni, I apologize. I try not to, but sometimes it gets the best of me. Apologize. SAP is a prime vendor of the largest companies in the world. These are not services that I believe will be disrupted by vibe coding. In fact, SAP is throwing down the gauntlet, and the fact that they're introducing a software suite that combines data, cloud, AI, and automation features is super strong. And I can tell you the way that those negotiations are likely to happen because I was the one that negotiated the Workday contract and the renewal. On the renewal, likely once this gets set in stone, the reps will start calling their contacts, set a meeting, they'll walk them through, in addition to sending them the information about all the new features. They'll get them excited and they'll talk about layering it in. They already have the relationship. And you're not going to, and this is where I will go and debate anybody. You are not going to build a third-party solution to layer on top of SAP for this because of data compliance, because of data security. You have social security numbers, addresses, bank accounts, all your corporate data. It is data compliance. You are not going to compete with SAP, Workday, or Oracle and layer in a third party. You're going to, if you want these services, you are going to be upcharged and pay for it from your provider. That's just how this is going to work. That is just how it's going to work. Did I see Ed Zitron talking about off-balance sheet debt? I did not. I did reach out to him and I did ask if he would be interested in coming on the channel and he has not responded. He has an open invite. I'd like to learn from him. I think he's wrong. I would love for him to convince me otherwise. I'm open to having a conversation. I happen to like SAP here. It is so sticky. Lena is here. Thank you for being here. A15, thank you for backing it up. SAP is so sticky. We have it at work. No way in hell our company will let it go. Training alone would cost tens of millions. You're probably at a little bit of a larger company than I was. You're right. And I'm not going to get into numbers, but I will say it was 7 figures for the implementation in addition to everybody's time to implement it and roll it out. It is not easy. It is very, very, very strong. Now, we do have new news. The U.S. embassy in Jerusalem, security alert. Due to heightened tensions in the Middle East, the security environment remains complex with the potential for unforeseen escalation. U.S. citizens should exercise increased cautions, et cetera, et cetera, et cetera. They are now putting out additional alerts. Telling you this is going to be a crazy weekend, in my opinion. My company has been a data disaster. We just switched to SAP to fix it. Believe it or not, a lot of companies switched to these platforms to fix it. We did. A lot of companies do. And the markets just went green, ladies and gentlemen. The markets just went green. The NASDAQ is green. The S&P is green. The Dow is green. Total Energies. Q2 earnings surged over 68%. I don't think you guys really care about that. AMD was super strong, introducing a new line of AI data center products. We watched a lot of it yesterday. The big takeaway, Lisa Su, absolute superstar, projected that the market for AI accelerator chips could reach $1.4 trillion by 2030. An estimate, she said, had doubled over the prior 12 months. Despite the scale of that opportunity, AMD's shares declined and the market response was muted. Now, the bullish case is that AMD can translate a growing accelerator market into meaningful share gain. The risk is that NVIDIA's software ecosystem, install base, and customer relationships are still very powerful. I think there's room for both companies to do well. And, if AI can replace SAP, I will be out of my job. I don't think SAP is getting replaced. SAP is the king of ERP. It really is. We have new news on OpenAI. Testing incident. I mean, we all know this. The Hugging Face. Representatives Ted Lieu and Nathan Moran introduced a bipartisan legislation that would require developers of the most advanced AI systems to retain the ability to slow, suspend, or shut down models that present serious risks. I don't even know how you do that. Wouldn't the AI figure out a way around it? The proposal would make model control systems, incident response, and access management more than technical best practices. They could become explicit compliance requirements for frontier model developers. Now, I got a problem with that because if you're going to do it for OpenAI and if you're going to do it for Anthropic, you got to do it for open source. Everybody. Has to be unilateral. Has to be unilateral. I also don't think that this is going to work. We'll see. We will see. Let's take a look. Market's going green. Let's see what's happening in the market. And I got to figure out a purchase today for my dividend harvesting series. Service now trying to work its way back to 100. I cannot wait for Salesforce to report next week. Apple's going to report. Expect big news on Siri. I don't know. I don't know how they don't report big news on Siri. IBM trying to bounce off the bottom. Netflix after dark is not working out. NVIDIA's over 210. I like it a lot. Buying back my call option or my cover calls was a good idea. Uber, 69.48. Microsoft still too low heading into earnings, 384. Alphabet, 319. I think that's too low. Zeta 1948, Palantir around 124. We'll round up on that one. SoFi 1669, QXO getting smoked. Look, QXO is getting smoked because of rates. There's no question about it. You have a rate problem right now and an oil problem. It's going to impact QXO. CrowdStrike 183.70. It's still expensive, but it's the creme de la creme in cybersecurity. Amazon 233, Meta 605. I do think Zuckerberg comes out over the course of the earnings call and goes after everything. I made a lot of comments in this evening's basis points, so I'm going to stay away from talking about Meta. Watch basis points tonight. I believe it will be at around 6 p.m. I do think Zuckerberg, you know what? If Zuckerberg comes to the call with Excalibur, I will die laughing. I will die laughing. He should. He should. Qualcomm just got back over 170. Oracle 118. Maybe I just add another share of Oracle at this point to the dividend harvesting portfolio. Maybe that has to happen. I like the fact that oil is under 90, but I don't like that it's 88. I think it's too high. But who knows where we wake up tomorrow. Micron 946. And I think it's ridiculous. I think the chip companies, I think the neoclouds getting hit is ridiculous. We need a lot more compute. I think this is a long-term opportunity. You look at Alphabet, they just raised their 2026 CapEx to the top end being $205 billion from $190, up by $15 billion. I mean, there's no mistake. They're spending. 80% cloud revenue growth, strong demand for AI infrastructure. They demonstrated that customers are consuming more cloud capacity, even as Alphabet accelerates construction. Investors, nevertheless, are focused on the fact that Alphabet's cash flow has turned negative for the first time, and they're freaking out. Also, $759 billion decline in the Mag 7 yesterday. Alphabet also has substantial financial exposure to the private AI ecosystem. Bloomberg valued its Anthropic stake at roughly $124 billion, adding a potentially valuable asset alongside its operating investments. But if open source keeps getting good, I don't know. I happen to think Anthropic and OpenAI are going to do very well because I think it's not the price per token, but more the throughput of tokens. I can't wait for them to become public so we can stop speculating and get cold, hard facts. I think that that is what we need, my opinion. Cactus Jack, thank you for the news. Qualcomm tells customers prices are going up double-digit %. They can no longer absorb increasing costs. See, I don't know. I think that's a bunch of BS. My opinion, their margins are phenomenal. They're a huge cash flow company. So I think that's a little BS, but what do I know? What do I know? Cactus Jack, thank you very much for reporting that. You know that's right at my wheelhouse. I really like following Qualcomm. In Saudi Arabia, another one. Cactus Jack is just Johnny on the spot, everybody. If you're not following Cactus Jack, seriously, follow that channel. It's absolutely incredible. Saudi Arabia seeking Omani mediation after 2 oil tankers targeted in the Red Sea. I mean, there's no words. There's no words for that. No words. Absolutely no words. Then Quantum, for all you Quantum people. Ooh, did I place my Topps NFL pre-order? I did not. I have somebody taking care of it for me. I got a guy. If you've seen the Judge Collector walking around, he's my guy. He takes care of it for me. He's got the hookup. He has the hookup. Bloomberg is reporting that Chinese startup Cybot was close to raising nearly $100 million at a $1.48 billion valuation. Oh, you know what? We're gonna cut over. I'll finish that thought in a minute. I happen to really enjoy listening to Stephanie Link, so I'm gonna cut over. Give me one moment. See what she says.
That the interest rate story is one that is signaling perhaps there is a little bit of robustness underneath the surface. There could be some inflationary threats. The jobs market is still trying to stabilize and find its footing. But these are all setups going into what will be the busiest week of earnings season this quarter. And I want to know whether or not the setup in your mind for the markets, more broadly speaking, are ones that we think are good for some of the big, most influential reports that are going to come out over the course of the next 2 weeks.
Oh, I mean, I think Meta and Amazon are the big ones, and Microsoft, of course, too. And I think the biggest question mark out there is how much are they going to increase CapEx? Because they are. And so we just need to get ready for that. And for Meta's, they're guiding 125 to 145 billion in CapEx spend for this year. That's absolutely going higher. And there's rumors that they're going to grow 2027, like over 200 billion for next year. Amazon, they're already at 200 billion. They're going higher as well. But here's the thing. The CapExes are going higher, and we don't like to see negative free cash flow, but the fundamentals are really quite good. I mean, Meta's going to post a 26% ad growth number. Now, it's down from 33% the prior quarter, but that's because they have a 6 percentage point tougher comp. But their AI improvements are helping their business in terms of targeting, in terms of ranking, in terms of creative tools. And so the momentum is there in the business, and it's only going to get better as they spend more. I don't want them to spend more, but they're going to. Amazon, on the other hand, you're going to see an acceleration in terms of AWS. Because, well, Alphabet gave us that hint, right? But AWS they grew 28% last quarter, but they doubled their capacity. And this doesn't even include the Anthropic's $100 billion expansion. So their backlog is running at about $350 billion in AWS alone. And it's just money that is just crazy positive in terms of the business momentum. Retail, I think they also have upside too, especially on the margin side. So the fundamentals are going to be good. The CapExes are going to be higher. Where do you want to go? You want to go to the food chain, like I talk about all the time. You want to go to the industrial companies, the picks and shovels, the power companies, utility companies, the grid companies, because those companies are posting really good numbers so far. And I expect the visibility is only getting better as backlogs continue to go up in those sectors.
All right, Meta is one I want to kind of home in on a little bit here as well, because Stephanie does own Meta. And Kevin, I want to go to you for this one. You also own Meta shares as well. We've got some interesting analyst commentary coming out ahead of kind of what could be a massive catalyst for this. And this is the team over at Deutsche Bank, who today have trimmed their target price for those shares at Meta Platforms to $800. It was $810. So a small trimming, but they reiterate their buy rating over there. We expect Meta, they say, to deliver another strong quarter with advertising revenues likely approaching the high end of guidance as improving return on ad spend continues to attract incremental budget share. So that's an interesting story. We think that Alphabet's second quarter 26 results, especially the steady Q-over-Q growth in search, accelerating YouTube revenues, are a positive read-through and will carry through for Meta Platforms as well. Do you feel positive about Meta as we approach that big earnings catalyst?
I feel positive on everything that was included in that note, Tom. I feel positive about everything that Stephanie said with respect to Meta. But my concern is the spend, because this market now is not just giving away a freebie when it comes to the CapEx. So we learned with Google, we learned with Alphabet that what you spend matters, but what you're going to generate from that spend matters even more. Now, I think that the ad number is going to blow it off the chart. And really, that's the key to the business model. But if the street doesn't like the spend, then the stock's going to get slammed. So I'm of the mindset that it's going to be a good report, that it's going to be a positive reaction. But I'd be a little bit nervous just on the reaction of Alphabet. And if Meta does sell off as a result of that, I'll be a buyer.
Well, we have you, because we want to alert the audience here to a trade as well. Because of the Alphabet weakness that we saw in the context of the AI CapEx spending numbers, you have actually gone ahead and made a transaction with Alphabet. Let's talk a little bit about why.
So this is pretty exciting, Don. This is the first time that we've owned Alphabet in our flagship dividend portfolio. And what I was trying to say before about the hyperscalers next week, dispersion's creating opportunity. And this was a big sell-off. And I think the street overreacted to this sell-off, in particular because of some of the numbers under the hood. The revenues were up 24% year over year, but specifically Google Cloud surged 82%. Now, people are worried about the guide, they're worried about the CapEx, but if you look at everything that they're doing, Search, Google Cloud, Gemini, YouTube, all of the AI things, not to mention Waymo, I think that there's an incredible opportunity here as an investor. Now, why did we buy this for the first time? In April of 2024, Alphabet announced a dividend for the first time in its history. Now, we didn't just jump in and buy it at that point, but over the past 6 months, they've had a 22% increase on that dividend. So we look for dividend growers. I think it's a maturation of the company, similarly to why we had purchased NVIDIA for the first time lately. These are not stocks that are new, but they're very new to the type of the portfolio that we manage. So we have a small position in Alphabet. I think yesterday was a great buying opportunity. And to my point earlier, if Meta pulls back, I think you'll have an opportunity there as well.
All right, Britton, what do you think? Because
I got to tell you, that's not the reason I would be buying Alphabet here at all. I actually think Alphabet should get rid of the dividend, to be brutally honest with everybody. Alphabet's dividend, and look, I love my dividends. I am a value guy. I love dividends, but you know what? You're paying 0.28%. Nobody's buying Alphabet for the dividend. 88 cents. They're expected to do $19.40 of EPS, and they're paying you less than $1 of that in the dividend. Scrap it, get rid of it. Get rid of the dividend. It's not even worth it. I would rather buy NVIDIA for the dividend right now than Google. I want Google investing in CapEx. I want Google focusing on building out and fortifying their future. Don't even play around with this dividend. It's not even worth it. I just don't get it. I don't get why people are. The fact that you're going to buy Alphabet on the dip for the dividend, like, what are you doing? I don't get it. Maybe it's something I'm missing. Like I said, I'm not too smart. But this is there are a lot better dividend compounding opportunities out there. I want Alphabet to deploy all that capital and monetize the return. You can follow Cactus Jack on WhatsApp. He has a channel there. If somebody could link Cactus Jack's stuff, that'd be great. Long-term, Alphabet can become a dividend growth company. There's no question about it. I'd like for them to focus on the build-out right now, dividend later. I mean, look at what NVIDIA did. NVIDIA just went 24x on the dividend, went to $1. Yes, I did have a chance to look at Verizon. I was going to wait. Chris wanted to talk about it. So I was going to wait for Chris to come on. So we will get to that. We will get to that. There we go. Cactus Jack, thank you very much. You can follow Cactus Jack and all the breaking news on WhatsApp. This is his channel. Please go follow Cactus Jack. Absolutely incredible. All right. Apple is reiterated to outperform. The target is raised to 330. We'll have that in a minute. I do like Apple a lot, even though I think they made a incorrect move on CapEx. It's certainly working out for them now. And the big thing about Apple, I'm never getting rid of my iPhone. I have to say that I was wrong. I thought I would get rid of it if Android came out with a better assistant. I can't leave that Apple ecosystem. Who am I kidding? I'm so used to using it. I turned on my Android tablet the other day. I'm like, I don't like this. I just don't like it. The Apple ecosystem is just awesome. So I will be sticking with it. My big thing for Apple, I would like to see them really make a Siri on steroids and charge $5 for a pro version and get that monetization increased in services. I think that would be great. I think that would be great. I agree, Joni. Apple is incredible interface. I've had their phone since the 7, and I don't think I can change. I actually changed from a Samsung to the Apple. I don't think I could get it. I don't think I could change. I don't think I can. It's just a great ecosystem. I mean, I'm even considering getting a MacBook Pro. We'll see. All right. They're going to talk about Apple.
I'm not feeling great about the trajectory of the stock over the next 2 quarters.
All right. While we have you, I'd like to just follow up really quickly as well, because a slew of you guys, 3 of you guys actually own shares of Apple. We had mentioned it before. We talked about this idea, this notion that Apple had kind of seen this maybe phantom stealth type rally in the spite of all of the weakness that we are seeing generally in mega cap technology. I also want to point out that we do have an analyst action today to kind of provide a little bit of that catalyst. And these are analysts over at Baird. They reiterate their buy equivalent outperform rating. They raised their target price modestly to $330. It was $310 before. In one of the reasons why, they talk about the expectation of solid quarterly results driven by strong iPhone growth and steady services trends. Memory pricing remains a daunting headwind, though price increases should ease the pressure. Valuation looks rich to past trends, suggesting much may be priced in, but we expect the strong free cash flow, upcoming product cycle, and early positive comments on Siri AI to support the stock. What do you think about that, Brandon? Is it a reason for you to feel comfortable about Apple relative to the rest of that mega cap tech trade?
I feel comfortable with Apple because you know what you're going to get. To my point about Google, it's like Google was this company with this type of balance sheet for well over a decade, and now it's doing something different to grow in the future. I get it. But with Apple, you know what you're going to get. I think we should retire like the super cycle word about Apple. I think they have way too many phones out there for us to have a super cycle, but their revenues are growing. The iPhone 17 to me was a home run. I think that the next phones, well, once again, the 17 has AI in it. The 18 going on will have AI. More and more people will want to have just the cool services, the ecosystem. And I feel really confident. I do not want a device from OpenAI. I do not want a device from Anthropic or even Tesla. I'm very comfortable with my Apple phone. And I think from a consumer perspective, they're just going to sit back and just win this because we all are going to continue to use their devices. So I think that's just, I don't think it's stealthily going higher. I think it's like in our face, pretty much going higher every day. And I think it will, especially going into next week, as we're going to hear Amazon and Meta are just going to spend just like Google.
On the other end of the spectrum, folks, besides that Mag 7 trade on the Apple side, is Tesla. There was an earnings catalyst for that. I know, Bryn, that you are one. I'm going to go to Kevin for this one here. The Tesla reaction has been interesting, on track for its worst week, by the way, since March of 2020, going to the pandemic era at this point here. It is not as big of an influence anymore as it once was. But the Tesla story, is it indicative at all of some of the risk appetite or expectations around just what these companies need to deliver to power that next leg higher, if there is one there to be had in the coming months?
I think it does, and I think it's very healthy. You know, for years, this company was able to move higher on any hope, any promise, any crazy idea into the future. And now you're more of a demanding Wall Street and more of a demanding investor who's saying, show me. Let's see a show me story with earnings. And this stock is something that is really years into the future. It's not a today story. But when you have the type of earnings report that it did, I think.
We'll get into Tesla in a moment. Android or iOS or neither? Android, iOS, or neither? I don't know how you can have neither, but I put it as an option. $53 iOS, 54%. Okay. All right. I do need a new iPhone. I'm still on a 14 Pro Max, and I do need a new iPhone. So I will, when the new one comes out, I'll be looking at it. Thank you for the jewels. I really appreciate Degozens. I sorry I butchered that. OE investor, thank you so much. JD for Shilly, thank you very much. Really appreciate it. Really appreciate it. All right. iOS is taking the win here, 55%. iOS taking the win. Yeah, I think it's very hard. Cabio, thank you so much. Really appreciate it. I think it's very hard to get rid of the ecosystem, and I don't know how I would leave. I just don't. I don't know how I would leave. Go back to landlines? Absolutely not. I mean, Diana, I know, I get it. You have me beat. You're on a 13. I'm on a 14. I'm not one of those people that upgrades all the time. I actually, you know what forces me to upgrade? When my battery, I'm going to check right now, when my battery is absolutely smoked and it can't hold a charge. And we're getting there. So right now, my battery health is 83% maximum capacity. It's around that time that I need to be changing out the battery. So I actually do not go to Apple and get a battery change out. I just get a new phone. Because I just have a feeling once you start tinkering with it, it's never the same. I don't know. I just feel like it's never the same. Addicted to trading. Thank you very much. Really appreciate it. I will check. Thank you. Really appreciate it. Toucan, you didn't have to do that. You could have just put that message in just a regular message. I would have seen it. Thank you very much. Yeah, Diana, I agree with you. Once the battery goes, I feel like you just get a new phone, but I'm a 3 to 4 year person. I think before I went to the 14, I think I had the 8 or 9. I don't even think I had the 10. I think I had the 8 or 9. I try to keep it for a long time. To me, there's no reason not to. There's no reason not to. Let's check. Let's see where we are in the market. And we got some guests coming on too in a little bit. We got some guests coming on. Service, meow, 97.76. Nostradamus, Chris called it, made the right move. Everybody gave him shit, made the right move. IBM, 215. Salesforce is up a little. Apple's holding it down. Apple's honestly one of the best stocks in the market. You know what? I want to show everybody something. And Amit and I talk about it tonight, not to this degree, but I think people need to really take this into consideration with Apple. I've never seen a company do this before in my life, ever. So this is from the Apple website directly. Apple is the greatest shareholder-friendly company there is. Since 2012, they have repurchased $851 billion of shares. They have paid out $185 billion in dividends. Their capital return over 14 years, almost $1.1 trillion, okay? Almost $1.1 trillion. That's more than most market caps in the market, and they returned it to shareholders. And you think about the dark years about revenue not growing, this allowed them to compound earnings. 90 billion, 76 billion, 95 billion, 89 billion of buybacks on an annual basis. They're already at a 36 billion run rate right now. It's one of the most incredible companies I've ever seen in my life. It is incredible. That's not true. Amit picked Apple. Unless I'm wrong, Amit picked Apple. Well, let's check. I could be wrong. Amit picked Apple. It's his best pick right now. Amit picked it. And I'm getting absolutely trashed right now. Matt is extending the lead. Extending it. Captain Sleepy Time is down 3%. I'm almost down 10%. I'm almost down double digits. Not good. Salesforce is my winner. You know it's dark times. And I now have 3 companies down 30% in a freaking month. Difficult, man. Difficult. I still like my portfolio. I still think it's going to be fine. Chris, Amit, and Jason. Where's Amit at? It's difficult. I mean, who would have thought? I mean, I'm shocked he took Rocket Lab. But, I mean, who would have thought Bloom Energy or SanDisk would have been down that much? And then Jason, not a single green pick. But his portfolio could really turn around with a vengeance in the second half of the draft. Yeah, addicted to trading is right. Historically, August is a thinner trading volume, and I do believe a lot of it is because families go on vacation, people take their kids back to college or boarding school or whatever. So August is usually a thinner month. Now, Tesla, a lot of people ask me about it. I think Tesla's going much lower. I really do. And quite frankly, I don't think Elon gives a shit. And I don't think he gives a shit because this could be, and I'm going to go, I keep saying I need a tinfoil hat. I should get a tinfoil hat. I think the lower Tesla goes, the easier it is for SpaceX to acquire it. And I think ultimately we will see SpaceX acquire Tesla. I really do. I really do. Tesla is also overvalued here. Same with SpaceX, but Tesla is very overvalued. I think it is going to continue to fall. The margins suck. Optimus keeps, it's the same thing. Nobody should doubt Elon. He's the greatest entrepreneur, greatest innovator, but the reality of the situation is FSD keeps getting pushed out. Now Optimus is getting pushed out. Those are the two real winners for Tesla going forward. So we'll see what happens. We'll see. SpaceX is going lower. Look, let's see. Where is SpaceX? Big old SpaceX. Oh, it's ugly. It's a bad week. It is a bad week, ladies and gentlemen. I mean, who the hell was buying here? You got to be so mad if you were buying there. Oh, my God. Jake, it's been a bad week. If we're going to talk about a decade, it's going to be a good decade. It's going to be a good decade, but it's been a bad week. Yeah, Kathy Wood. That's just what we want. We want to follow Kathy. American Airlines, I don't really like the airlines. If I had to pick one, it would be Delta because they have their own refinery in Pennsylvania. I bought more than one share for my nephew. My nephew's also 10. And I think in a decade from now, it'll be fine. And I will buy my nephew more. Look, I could buy my nephew more Robux. I think SpaceX is a better investment for his future. He still cons me into buying him Robux also. He doesn't know about the SpaceX. I think I could spend money worse than buying my nephew SpaceX. Just saying. I could spend it on using 20 million or how many tokens? I could spend it on using 121 million tokens in 2 days. I mean, I still find that hilarious. I still can't believe it. I still can't believe it. Oh, don't sleep. I got some trading cards coming, ladies and gentlemen. We may have an unboxing later today or tomorrow. We'll see. But I have a little, not an unboxing, but a mail opening. Made some investments over the past week. I have a new thesis on who's going to be the next superstar. Got a new thesis. Thank you very much, Brandon. Really appreciate it. I am a token maxer, yes. BWEN, I know nothing about it. I know nothing about it. Uber and Lyft both down. Yeah. I need to see Uber. I got to see about it. Uber's really annoying the hell out of me. Where's good old Tessie? Oh, God. That is so damn ugly. Basically gave back all the gains over the past year. Hasn't done much on a 5-year basis. And this is actually like a really huge consolidation, it looks like. But listen, if you were buying Tesla back in here, you can't complain. You can't complain. Tesla's probably made more millionaires than NVIDIA, to be brutally honest. I don't know. Listen, I don't follow BWEN. I have no idea what it is. I will look into it, but I don't. Here's the thing. I don't like talking about things I don't know about. I really don't. I promise you I will look into it. But I don't know anything about it. I like talking about things I actually know about. I don't talk bullshit. So I got to research it. And then I promise you I will come back to BWEN. I can't discuss it right now because I don't know about it. I don't know what to do with the jewels. I will Google it. I don't even know what these jewels are. Bio, I gotcha. I'm not saying it's not legit. What I'm saying is I've never looked into it. So when I have a bunch of people here, I'm not just going to start talking about it because I haven't done my research. So I need to do my research first. I promise you I will look into it. Jody, thank you so much. Really appreciate it. I honestly don't know what to do with these. I'm going to have to call Amit and ask him what to do with these coins. Like, how do I display them? And then I will get everything displayed. Yeah, I would love to look at Meta after the IPO. I'm happy to because I own it since 19. But Tesla's made more millionaires than NVIDIA, I feel like. And Look, I give Tesla shit on the valuation. It's still a great company. Let's be honest. Man, Meta is just incredible. Incredible, Meta. Incredible. I mean, we bought it right around here, like $19 or so in 2012. Still have it. I mean, that's the definition of long-term investing, in my opinion. More than a decade. More than a decade. I don't know, Jake. You know, Jake, the reason I say Tesla is because a lot of people, and I give Tanner a lot of credit for this. Tanner was in NVIDIA way before the ChatGPT moment, okay? I think a lot of people got into NVIDIA after ChatGPT, but a lot of people were in Tesla during the pandemic and before the pandemic. It would be interesting if we could ever find out who is actually the number one millionaire maker over the past 10 years. You know, you start going back 30, 40, 50 years, there's a lot of companies that have done really well for investors. I'm not going to touch that one either. Look, I can't tell you what you should do with your capital, okay? I cannot tell you. What I can tell you is I'm not exiting the hyperscalers. I love the hyperscalers, and I think that they are going to continue to do very well. They may just be bumpy. We discussed it. Tune in tonight. Amir and I discuss it very thoroughly tonight. Cosplay Batman. I can't do a Batman voice, though. I cannot do a Batman voice. Now, Palantir into earnings. When is Palantir reporting? Hold on. PLTR. August 3rd. So Monday, August 3rd. I will do a Palantir prediction video next weekend. I have to really look at everything. I will definitely put out a prediction video. I'm going to do a prediction video this weekend for Amazon, Meta, Microsoft, and Apple. Diana, you don't have to. I can't do it. I can't do it. I wouldn't mind buying more CoreWeave, to be brutally honest. I'm going to have to really look at that. I think that, wait, your best stock over the past 18 months is UPS? I thought UPS got smoked. Hold on a sec. That can't be right. UPS rebounded? Oh, my God. But yeah, UPS is down quite a bit. I think SoFi is going to be great. But once again, I've been a little wrong. Been a little wrong on it. But I think it's going to be very good. I'm not worried at all. What is Roy bullish on? Her? Is that what he's bullish on? He's done very well on it. I mean, he was talking about that very early. Very early, he was talking about that. Who upgrades SoFi? I did not see that. Oh, I think Zeta is going to have a really good couple of months. I mean, I don't know. There's nothing to talk about with BMNR until Clarity Act comes through. Is there still a bull case for CoreWeave? Absolutely. The bull case is very simple. We need more compute. They have 99 billion in RPO. I mean, there's definitely a bull case for CoreWeave. I don't think Clarity is going to get passed. My own personal opinion. You know, Hacks, if I knew that, I would tell you I have no clue. For that, I think the ETF is a better play because I got no clue how to pick that. Right. CoreWeave's got a lot of debt, but they just crossed over $1 billion of quarterly EBITDA. And that is very attractive. And NVIDIA just went past 210 again. NVIDIA. Look at that chart. Oh my God. NVIDIA was just dead money. I mean, oh my God, split adjusted basis. Crazy. I mean, you want to know why Tanner is so bullish? He was buying over here. You know, I'll take that. I will take it. Why isn't Basis Points live? Because we're recording at a studio. Doing it live from the studio would be a different process. Maybe we do it live in the future. We'll see. But right now, our setup right now is more for shooting the video. But we'll see what we do. I don't think we're opposed to it. Covert big bet, guys. Steve haircut. I like it. So here's the question. NVIDIA, pump or dump? Let's do a poll. Let's do some data mining. Does NVIDIA pump or dump on earnings? Pump, dump. Time to data mine, everybody. Time to data mine. I don't want to be a mediator between that. While it was funny, I don't want to be a mediator. $24-hour channel. I mean, that would be a little difficult. Man, split down the middle. Oh my God. Split down the middle. I have a feeling it's going to run up into earnings and sell off. That's just my own personal opinion. Don't be surprised if the market dumps this afternoon. There is no. Black Mamba, no. Nobody's watching me sleep. Sorry, that's not happening. That is not going to happen. Don't be surprised if the market dumps today. People may want to be out of the market because of whatever risk there is in the weekend with attacks on Iran. I don't think that I think we could wake up to a different world this weekend. That's my own opinion. All right. Let's see where we are, man. I like NVIDIA being up. I really do. I would like it even better if SAS started doing something. Service now is trying to get back to 100. IBM 215. I mean, the market doesn't seem like. Let's go back. Let's look at the Qs. What are the Qs doing today? Yeah, the Qs are starting to break. Not good. No. No. Yes, the attacks have been happening. I'm not over exaggerating. We may be hitting energy now, utilities, blackout in big, heavily populated areas. That's not what we want to see. That's why I say that we could wake up to a different world. Don't want to see it. Do not want to see it. Now, if Iran comes to the table, that'd be great. That's the best situation. What's Intel doing? It's really not that bad. After the run Intel had, that's really not that bad. Sorry, I cannot tell you to buy them back. I am sorry, I cannot tell you that. You got to do what's best for you. It was best for me. I had different options, though. I had August 200s that I bought back. I can't recommend that you buy back anything. Cannot do it. Cannot do it. I apologize. Can't do it. Won't do it. Can't do it. Won't do it. Oil is down. Oil is down. But you know what? Oil can actually go over 100. And that would be horrible. It's coming down today. But today's price on a barrel at 88.33 is still not good. I mean, that's a month. Like we had rolled over. That's the big problem. You look at this on a 3-month basis or on a year-to-date basis, oil rolled over. Joni, I caught myself. I was about to drop an F-bomb. I caught myself. We were right there. We were right there. We were so close. We were so close to this rolling over to where it needed to go. And it just went a different direction. If Iran comes to the table and this comes down, that'd be great. But we're getting too close to Jackson Hole. Jackson Hole is in what, 3.5 weeks or so? Not good. Not good at all. I am really, really worried because I love the way the chat gals keep Steven. Why? Because I didn't drop an F-bomb? Oh, that's funny. Listen, I get bullied everywhere. It's okay. It's all right. Oil needs to come back down to 75 at a minimum. We want to see 75 to 85. We do not want oil at 88. We certainly don't want it at 98. Yeah, CoreWeave is getting crushed. Look, people are talking about debt. People are talking about this or talking about that. I mean, keep in mind, CoreWeave shot up like a rocket. Why can't I drag like that? Like a rocket out of the gate. Dropped hard, came back up, dropped hard. I'm not worried about it. This is where I like buying. My average price is under 80. and I am still a buyer of CoreWeave. I'm still a buyer of CoreWeave. I like CoreWeave a lot. I will continue adding. Maybe I add a little bit more today. There is one company, believe it or not, that I want to add to the portfolio, and that's Blackstone. Where are we at? 128 today? I actually like Blackstone a lot. I am not a shareholder, but I like Blackstone a lot. One of the best capital allocators. Brad Thomas and I talk about it. Video will be out today at 2:30. If you don't know who Brad Thomas is, Brad Thomas is the owner and founder of Wide Moat Research. He is one of the only people I follow on Seeking Alpha, and he's a huge real estate guy. We talk about real estate. We talk about data centers. It's a very interesting conversation. That's going to drop at 2:30 today. It's about 45-minute long. So I'll be looking to get Brad back on the channel at some point in the future. He's a teacher at NYU, guest lecturer at guest lecturer at Cornell, Penn State, and Georgetown. I mean, he's an authority in the real estate game and has amassed a huge following. So I think you'll like it. And then there he was, Mr. Patel. How are you?
What's going on, Steve? Hold on a second. I
Well,
gotta change. There we go.
I'll tell you what's going on, Mr. Patel. In the past 2 days, I have used 121.3 million tokens.
Okay. You're token maxing?
I mean, that's just with OpenAI.
Mm-hmm.
That's not even. That's
why
not
not
even
use
the
some
fraud,
Kimmy
though.
K2? Why don't you use some Kimmy K3?
121.3 million tokens I've used. I used 95.3 million yesterday, Chris.
I don't know why you're showing off. Like, what's the like? You use AI, okay? Like, what's the big deal here? You tell me. Like, what's?
I don't
saw
know.
what you did.
I'm just saying, if I'm using tokens like that, there's got to be people using more tokens than me. That's all.
No, I definitely think there are, but I mean, I think a lot of the token usage right now that we're seeing, it's a lot of exploration, but at the same time, token prices are coming down as well, right? So that should theoretically help. So I don't know where we're going to go with this, but I do think token usage is just going to keep skyrocketing. I think that's like the modern day, like light bulb, like electricity. I'm sure when the first electricity came out, it was expensive, but then like it got so distributed. The thing is, like, tokens are a lot more scalable. So
absolutely. Did you like the report I sent you? Would you like a copy every day sent to your inbox?
No,
You do not.
I need less biases. Like, unfortunately, the thing that I have to try to do a little bit is step away from the markets. I know that sounds like a little weird, but the thing is, like, if you get too much information, sometimes that too much information can sort of like become, well, it can bias you against and for something that may or may not really be there.
Yeah, but Chris, I even put a whole economy sector in there.
No, it's not just the economy. It's literally like, just need to focus on the few things and just stick to it. And then that's it. Like, the thing in this market, though, is that you don't need a lot of wins to make it work really well.
No.
You know, as long as
You want to talk Verizon? What were you researching?
Yeah. So one of the things that, so I listened to both the Charter call today and Verizon, and yesterday I listened to Comcast's call, because all three of them are sort of like tied into the next 5 years worth of like telecommunications, right? So you had AT&T also, and T-Mobile's there reporting. So the highlight, do you mind muting yourself? Because your air conditioning is just like I hear everything.
Yep.
Okay, there we go. So the first thing is, a month ago, Charter supposedly was speaking to SpaceX about possibly partnering to create a space like Starlink mobile feature. And because of that, it kind of shot up. And then Comcast also kind of went up because of that. And what was very interesting about this whole thing is that people were wondering, like, okay, Starlink is going to be the next like mobile provider, right? Mobile cell phones and everything. And today on the conference call, everyone was asking the Charter CEO and leadership, like, hey, what happened? Like, are you guys in discussion with SpaceX? You know, like, is this a thing? And like these guys basically like dodged that question so hard. I was like, oh crap, like they're not even like willing to even like remotely talk about this. And then I joined the Verizon call, and in the Verizon call, Dan Schulman basically laid it out. He's like, there is no back door into our MVNO partnership. Right there was a very key key highlight that literally was like a moment. It was like a clarity moment for the entire market. Because the thing is, T-Mobile, T-Mobile, AT&T, and Verizon control a lot of spectrum. They control pretty much the cell phone market that's out there. And it's not as simple as, you know, you can have a Starlink system and automatically now you're connected to 5G. Like, no, there's a lot of like, you know, backhaul that you have to do. There's like speed issues, there's physics issues, like, you know, depending on how dense you are. Like imagine right now you're in Times Square. There's a level of connectivity you need in Times Square versus a connectivity in something like a rural part of the country. So all of these things combined, basically the gist of it, I'm not going to go too far into it, but all of them are trying to lock SpaceX out of the mobile cell phone business. And the thing is, a lot of their spectrum, they are going to allow for dead zone coverage, but they're doing it through like ASTS. I think T-Mobile still has like Starlink, so you might get Starlink mobile from that, but it's not as simple as Starlink is going to create its own mobile service and people are going to be able to subscribe to it. And I think that was a big fear for a lot of people in the telco space. And the only other option that SpaceX has right now is possibly an acquisition of a telco. Now, I don't know which one they could buy and pass regulatory scrutiny, but the only one that comes to mind right now is T-Mobile. You know, and T-Mobile right now is about 200 billion. So that's why if you look at the markets today, T-Mobile was up. Let me share this. Look at this. T-Mobile's up about 5.5% today. Verizon's up 3.6%, and AT&T is up 3.5%. So the threat of SpaceX may sort of be like subsiding, and if that's the case, then you could see some return of some interest coming back into the Verizons, the AT&Ts, and the T-Mobiles going forward. Like AT&T especially, because they had a great quarter and they got crushed all the way down to like 19. Now it's back up to 23 in literally like a month. So you can see before it was around 28. So there could be a recovery in AT&T. But yeah, I mean, Cable, Charter, and Comcast, they're sort of in this weird-ish like situation right now where they're kind of being hit by all three sides. Rural is getting dominated by SpaceX via Starlink. Suburban is being killed by FWA and fiber, and then urban is getting killed by FWA and some fiber. So there's just, you know, they're losing users right now, but they're not losing so rapidly that it's like deteriorating their top line. The other thing is their mobile line business is actually growing pretty fast. So that's kind of like, it's like a weird thing where you're losing TV subscribers and you're losing some broadband, but at the same time, you're growing your like mobile offerings. And so their revenues they're okay. So these, both Comcast and Charter, they have a ton of free cash flow, but they also have a lot of debt. And so Charter, to me, looks interesting here only because their free cash flow right now is like 50% of the market cap. Like, let me repeat that. Their projected free cash flow next year is going to be 50% of their market cap, because they have a lot of debt, but that debt is easily able, can be serviced very easily from their existing cash flows. And their cash flows are not declining at a rapid pace. So the thing is, the company, and they're committed to doing more share buybacks. They're going to do some debt reduction also. But once this Cox merger finishes, they're going to be able to kind of leverage that additional free cash flow and just buy back a crap ton more shares. So I think Charter should stabilize eventually. I can't tell you when that's going to happen, but it's definitely there. And the Cox merger would be very, very helpful for them. So if the deal finally gets through California, which in all likelihood will get through, this thing could shortly run probably like 150, maybe 200. But we'll see what happens. And then over the next 2 years, we'll probably see just a ton of share buybacks and debt reductions and everything else. And so, yeah, and Comcast is spinning off their NBC Universal division, because I think they are trying to sell that whole thing to Netflix and get sort of like a Warner Brothers Discovery kind of multiple from that. So that's kind of like the highlights just generally of what's going on in the telco space. But yeah, but SpaceX right now is getting absolutely demolished, because everyone is looking at SpaceX and saying their total addressable market, according to Verizon, what Dan Schulman said was that they have about the capacity, that they have literally like the total market share is probably going to be about 10 million connected homes in the country, and it's going to be mostly like rural. So if you think about it, 10 million connections is not exactly like worth $1.5 trillion. So they're going to have to lean on a lot of their AI stuff. And I do think that there's probably going to be like international penetration too with SpaceX. So that's not just the United States, but the US happens to be like the biggest high dollar users in the world. So, when you think about the amount of people that are connected through SpaceX via US, you're looking at much higher margins than trying to serve the other parts of the world. And one last thing is, when it comes to the unit economics of, let's say, fiber or even the regular cable, you put this thing in the ground once, and now you've got this stream of income that you can milk for like ever, right? That's not the same thing for SpaceX. The satellites that they put into circulation, they have a shelf life of about 5 years. Satellites don't last up there forever. So imagine having to kind of refresh all the time all of these LEO satellites. So the unit economics may or may not necessarily work, especially if these fiber guys and these cable guys, outcompete you on a per price basis. I mean, SpaceX, like Starlink is good, but it's also expensive. Like, I don't know if you looked at the prices on it on Starlink. They're not cheap.
I have.
Yeah, so it's not the easiest thing to compete. Now, there can be I can't say what the unit economics are going to be in 5 years from now, because all of it is dependent on what the launch costs are, the manufacturing of the satellite costs are, like how many satellites you actually need to cover. That was another thing that Dan Schulman spoke about too. Like, the amount of coverage that you need is like very finite on a per beam basis. Even if you increase the number of beams that are coming in from the satellite, it's not going to be as easy as people think. And so I think the market eventually wakes up to that. And so we'll see over the next 5-10 years. I mean, can always be technology improvements that could rewrite that whole thesis, but yeah, that's where it is.
So do you like the Verizon deal with Google for the dark fiber? I mean, when I look through
I forgot to mention that was the other thing too. So Verizon is now monetizing a lot of their assets, like fiber assets, and Comcast and Charter also have a ton of optical connections, like fiber optic connections all over the place, because that's how they do their their high speed data going across. So think of it as, like you have your connection to your home with cable, but that cable is routed to a fiber optic backbone that's stretching across the country. So if you're trying to go with low latency applications, that is a really good like segue into if there are willing people that are willing to pay for priority. So Google, that's what they did. They partnered with Verizon for certain, not for all of the footprint, just for a very small amount of footprint. And Verizon also has a lot of data centers. Like Charter mentioned that as well, that they have like a lot of energized data centers in city centers where you can theoretically put more like AI compute that has super low latency, like Cerebras has. And so that could be something that could be monetized in the future as well. So there are assets within the telcos that the market may or may not be appreciating. But like I said, this is like an evolving thing. But $1 billion to Verizon for connections to to Google, and the way that Dan Schulman put it out there, that it was going to be like almost like a 10 to 15 year kind of like life cycle of increases in value creation. So
Yeah, I mean, I really like the deal. So the way that the deal works, Verizon signed an agreement with Google worth over $1 billion for dark fiber connecting Google's data centers, and expects additional deals by the year end that together would be worth multiple billions in revenue over the next several years. And this is the first public really discussion of the AI Connect initiative, long duration contracted revenue, margins equal to or greater than the existing structure. And, this is growing sustainability for 5 to 10 years at least. Verizon is also retrofitting central offices into power ready, permitted edge data centers for inference.
Let's listen to it together.
Direct play right now.
Let's listen to it right here. Hold on.
Agreement with Google.
Hold on. So let me just play.
We recently signed an agreement with Google, valued at over $1 billion, to use Verizon dark fiber to connect their data centers. We have other deals that we expect to announce by year end that, taken together, are expected to be worth multiple billions of dollars in revenue over the next several years. These are long duration, high quality, contracted revenue streams from some of the most demanding infrastructure customers in the world. We believe that this is just the beginning. The build out of AI infrastructure across the United States is one of the largest capital cycles of our lifetime, and Verizon is uniquely positioned to participate in it. We own one of the most extensive long-haul and metro fiber footprints in North America. We have spent decades building the kind of carrier-grade, low-latency, highly resilient transport network that hyperscalers need to connect compute to compute, model to model, and region to region. We built that infrastructure for a different era, but it has turned out to be exactly the right asset for this one. We are also in the early stages of retrofitting many of our central offices into data centers for inference edge computing, with multiple conversations underway with partners who are eager to utilize these power-ready and permitted locations. We are moving quickly to expand our TAM in the rapidly growing AI infrastructure market. The agreements we have signed are the leading edge of a strategy that will become a meaningful, incremental leg of growth for Verizon. We expect this initiative to noticeably contribute to our revenue growth starting next year and to grow substantially from there. I want to emphasize what that means in combination with everything else I've said today. In the back half of 2026, our mobility and broadband service revenue growth is expected to accelerate, with Q4 forecasted to grow by approximately 4% year over year. That acceleration is independent of the incremental AI infrastructure revenue that begins to layer into our results starting in 2027. Said differently, our core business is accelerating, and a new revenue growth vector arrives on top of it next year. This is a very different revenue growth profile than Verizon has had in a very long time. And it is the foundation of why we believe that we are at the beginning of a multi-year growth story. When I gave our initial 2026 outlook back in January, some of you rightly questioned if we could deliver this kind of acceleration in a single year. After almost a year into my tenure, we are not just on track, we are significantly raising the bar. And we are doing it the right way, through healthier customer relationships, stronger network performance, and disciplined execution. Tony and I believe that this is what a disciplined focus on customers and shareholders look like. We are innovating and investing in the full end-to-end customer experience. We are investing in our network. We are investing in our broadband footprint and the convergence opportunity. We're investing in our AI tech stack. We are growing our dividend, and we are paying down our debt. We are returning incremental capital through buybacks, not as a one-time event, but as a sustainable feature of how we run this company going forward. Every one of those levers is moving in the right direction, and that is a function of the operating discipline across the company. The momentum we have in Q2 is driven by our leading indicators: lower churn, quality net adds, increased customer satisfaction, network performance, convergence, and OpEx and CapEx efficiency. And they are all pointing in the same positive direction. The back half of 2026 will be stronger than the first half, and 2027 should be stronger than 2026. This is a multi-year story, and we are early in it. I want to thank the Verizon team for all your hard work. These results are yours. The customer-first mindset, the operational rigor, and the urgency you are bringing to this transformation every day, that is what's showing up in our numbers. And I want to thank our shareholders for believing in us. We want to earn back your confidence with execution, not with promises.
Like, one last thing that we should probably listen to before I hand it back to you is this right here. Right.
How does your broadband product portfolio, and especially fixed wireless, sort of stack up to competition from these LEO constellations as you see it evolve? Thanks.
Yeah, thank you, John, for that question. It's a great one. Look, we're very pleased with our broadband net adds. We continue to take share. As Tony mentioned, we have 17.1 million broadband customers. By the way, 58% of them have mobility as well. So we are doing a really great job at cross-sell, and that's accelerating. And, you know, as I mentioned on our last earnings call, you're going to continue to see a mix shift towards fiber. You know, we're growing our homes passed. We've got line of sight to at least 32 million homes passed by the end of the year. And, you know, in our way of thinking, broadband is broadband. You know, where we don't have fiber, we'll offer FWA for a true nationwide service. Customers don't distinguish between the two. They think about, you know, like, what speed are they going to get? Typically on FWA, you know, we're at least 300 meg down speeds. And, you know, I really like what we're seeing with our convergence efforts here. You know, obviously we've got lower churn, but we're seeing increased ARPA as well. It's interesting with our Verizon One product that we just launched, well over 50% of the people signing on to Verizon One are upgrading their speed levels from that. So that's incremental ARPA. We have room to sell them more lines, more perks, that kind of thing. And so from a lifetime value perspective, we just want to drive as much convergence as we possibly can. In terms of satellite, we see no impact from satellite providers on our broadband penetration and our broadband capabilities. And by the way, that's not surprising. It is very difficult for satellite providers to provide a service that's even close to what we can provide with our broadband services. I mean, today's satellites, their beams cover hundreds of square miles. Even at the very lowest broadband speeds, call it 100 meg down and 20 up, the ceiling that they can provide service without degrading quality for everyone, is very small. I mean, even if you look 5 years out and assume that V3 satellites are in place at very low Earth orbits, that you've got 1,000 gig down, 100 gig uplinks, takes 5 to 7 years for them to scale out that. And when they do, maybe they take their beam size down from hundreds of miles to 25 in suburbs and in urban areas. But let's just call suburbs right now. The ceiling for them before they degrade service is 10 to 40 homes passed per square mile at the lowest broadband speed at 100 meg. If they try and compete against FWA at 300 meg, that ceiling drops to 5 to 20 homes per square mile versus what we can do is anywhere between 500 and 2,000. So we're like 100 times to 1,000 times more efficient. Our speeds and our capabilities are much higher. And it's basically not possible because of physics, not because of execution, but because of physics, for satellite to effectively compete against a terrestrial network in either mobility or broadband in urban and suburban geographies, which, by the way, is where like 95 to 98% of our revenues are. Satellite does have a TAM for sure. It's probably somewhere between 6 and 8 million homes in the US, but it's in primarily very rural geographies where building out a terrestrial network just is cost prohibitive. It doesn't pencil out. I would also say, although you didn't ask this question, but I've read it in speculation out there, that there is no backdoor to our MVNOs in any structure. We think that satellite is very complementary to our service. We want to work with the satellite providers, primarily through the JV with T-Mobile and AT&T. But there is...
What he's talking about is ASTS. He's not talking about Starlink. It's basically, that was like, we're going to shut out Starlink from this. But let's finish up with this.
So hold on. So for Starlink, it ain't cheap. Like, I looked into it for residential. I decided not to get it. $85 a month for 200 Mbps, and that's on the down. I don't even believe that's on the up. I believe that's just down. I mean, so if we zoom in, that's Rome, sorry. Use on residential 100 Mbps, residential 200 will be limited to download speeds of 100, 200. And then it doesn't even say for up what it is. I mean, that's not cheap at all. That's not competing with Fios by any means. I mean, I don't see how how anybody thinks that these satellite companies can compete with fiber. Matt, what do you think? I mean, you're in the space with Rocket Lab and everything. Did you get another haircut, Matt? You get a little shave? What's going on?
You judging me, Steve?
I'm just saying, you look like, clean. You look like you went to the barber.
He said you look gay, basically.
Is that what he said?
That's what I
didn't hear
said.
that.
What
Hey,
I'm
man,
saying is you look like you're high and tight on everything.
The hair got a little cut.
Look at you.
Gotta keep it, gotta keep the women guessing, Sorry, I was sleeping. What happened?
Sleepy baby, I want to know what you think about what Dan Schulman said about how satellites are not going to be able to compete with fiber, pretty much.
What does Dan Schulman think about my existential crisis question for the day, which is, do I eat food so I can put hot sauce on it? Or do I put hot sauce on the food so I can eat it?
I don't know what we're talking about anymore.
Yeah, I wasn't paying attention to that whole Verizon call. No, I'm just kidding. I think it's an interesting debacle. I mean, Verizon has a boatload of debt. It has plenty of capacity from an EBITDA perspective to continue to pay off that debt. But at the same time, the world is moving into faster, more remote, less connected, wireless sort of solutions. So it's an interesting place to be right now, I think. I mean, there's a reason why Comcasts of the world are getting hit. There's a reason why the Verizons and the AT&Ts of the world aren't getting the premiums that they used to. But at the same time, I feel like it's going to be a long transitionary period before we can fully rely on something like a Starlink, like a Rocket Labs, Iridium communication, or an ASTS. I mean, yes, those things are building out, but even still to this day, if you have a lot of points trying to connect to a single satellite, you're going to get bogged down. So at the moment, I'm not entirely sure how much capacity one of those satellites might have. In case, let's just say you have like an entire stadium's worth of people all trying to upload Instagram stories or something at the same time. Will you have the capacity to do that if there wasn't a Verizon or an AT&T or a T-Mobile being able to take some of that bandwidth, right? And I don't know the answer to that. So it's going to be an interesting story. And I think the next thing, though, that I think is going to alleviate a lot of this is when Starlink V3 comes out. So, yeah, I don't know. I missed kind of the reason why we were listening to Verizon. Are we taking an outsized position? Are we focusing on dividends now, or what? I kind of missed it. I showed up 20 minutes late.
So they did a deal with Google for $1 billion for dark fiber to connect data centers, with more deals expected to be multi-billion-dollar deals. And on the earnings call today, they basically, or should say, Schulman basically took shots at a couple of companies indirectly. And, I've had a thought that the satellite companies just aren't going to be able to compete, especially in enterprise, because it's going to be very hard for them to be able to provide the bandwidth that's needed on a corporate infrastructure from a bandwidth standpoint, especially on upload, especially getting through cement. Like you're not talking about using a cell phone out in the open on the street, right? When you're in an office setting and you're in a building, you're in a cement container. So I think it's going to be very hard for them to compete on that. I'm just not, maybe I'm looking at it wrong. I actually think that SpaceX is going to acquire American Tower, to be brutally honest.
I don't think that's necessary. Yeah, I'm not, but I think right now, with the spectrum that's out there that Starlink is using, I would need to do a little bit more research on it. But I mean, I don't know how competitive it is on like a rainy day, for example. Like Steve and Chris, you guys are you've probably been around. Remember when DirecTV and satellite TV was like the cool thing back in the day? You remember when you had a thunderstorm that was like 25 miles away, and next thing you know, you can't watch TV? Like, is that, I don't know how real that is right now with the current accessibility and uplink. I mean, you're talking kind of something that you were hitting on very closely, Steve. Like, I don't know the capacity for some of these band systems and their ability to be able to upload or download when weather gets a little bit rocky. The thing that I know is a little bit easier is from an Iridium communications perspective, the L band is a little bit better in terms of being able to access, but at the same time, kind of like what you're talking about, the L band is not capable of the upload and download speeds, right? So you're not streaming from L band, you're not doing anything like that. So in terms of an Iridium communication, like you wouldn't be seeing a Rocket Lab say being able to provide internet for you to download or watch Netflix, right? So I don't know enough about the different spectrums. So I still believe that the Verizons of the world and AT&Ts of the world, while we continue to figure this out, will be massive in terms of the foundation that they built over decades, right?
Sorry, I'm buying some Verizon right now.
Wait, what are you doing?
I'm buying some Verizon right now.
Buying some Verizon. I mean, locking in that dividend, baby.
I'm locking in some. Well, no, I'm doing spreads on it, bro. Did we not just listen to the same call?
I don't want to give anybody any ideas, Chris.
Screw that. Well, I'm taking my ideas right now. I'm doing what I need to do.
All right.
But I think in the long term, I mean, unless they really get involved in the satellite, and I mean, I don't know. I just find it very tough that being able to lay all this wiring and like think about how much regulatory you need to deal with, like to install new systems, right? Like I don't know. It just doesn't. To me, it makes it simpler to have some sort of satellite that you don't necessarily have to see, and you get a lot more connectivity. It's able to be able to broadcast at a much larger wavelength. But there's pros and cons with either way that you look at it.
I mean, I'm a shareholder in Verizon. I think Verizon's very undervalued, and we'll see what happens.
Steve, do you own more than 5% of Verizon?
I do not. I don't have to disclose because I do not. Wish I had that type of money.
I have Verizon. I am about to buy more of Verizon, but these fucking contracts are expensive, though, man. What the hell?
Yeah, people are not sleeping on the opportunity. That's why.
Well, nah, go back to sleep. You need to buy me some more contracts, bruh.
Go back to sleep, he says. Go back to
$45.
So, Matt, what are you looking at these days heading into next week's huge earnings?
Next week's? Well, I'm just kind of surprised. I mean, let me just take a good quick gander. I'm still trying to understand why we had a big drop off on Alphabet. I mean, I get it, but in terms of the CapEx increase, like maybe people are really scared that we're in the midst of this free cash flow or lack thereof sort of narrative, and people are getting a little skittish, trying to take money off the table. I'm not really 100% certain, but that sneeze has impacted Amazon, the Microsofts of the world. So as always, I'm going to continue to stack up paper. I mean, next week I have another paycheck coming in. I'll be able to buy another few shares of each of them. And that's kind of where I'm at. I think the thing that I'm most excited to see is just the quarter over quarter or year over year AWS growth and Azure growth. But I think just based off of what we saw with GCP and the S curve that you were so kind to show the other day, Steve, which is a phenomenal graphic.
I'll show it again.
I'm very curious to see what something like a Palantir looks like, because Palantir allows you to utilize Azure. It allows you to use AWS. It allows you to, and so my question is yes, obviously Gemini and things like that have accelerated, not saying or trying to downplay that, but I anticipate a large portion of that is enterprises utilizing AIP and the tools that Palantir are coming out with. So I wouldn't be surprised if we continue to see an acceleration again this quarter for Palantir, and really starts to question, Steve, my thoughts 24 months ago. I was like, there's absolutely no way that Palantir is going to be able to grow north of 50%, blah, blah, blah. But here we are. I'm continuing to get humbled. I mean, maybe people like Amir were a little bit more bullish on what the potential growth rates could look like, and I'm probably going to have to eat my hats, or the several Palantir ones that I have. Actually, I have a bucket hat. Let me switch. But yeah, that's all I got to say about that.
Look, people are being ridiculous with Alphabet. Do you not want them spending? I mean, don't invest. That's the reality. Just don't invest in Alphabet. I'm sick and tired of it. I hope Alphabet goes to 200. I hope it goes to 200 because I'll buy the.
Don't fire me up like that, Steven.
Like, oh my God, they're going to spend another $10 billion or $15 billion on CapEx this year. Oh my God, who cares?
Dude, if it went to 200 bones.
So Google Cloud, look at that S curve in Google Cloud. You're telling me that that's not warranted to spend the CapEx? Just became a $100 billion plus run rate business. Here's the reality. Look at their revenue. From Q1 2020, they were doing about 40 billion, 35 to 40 billion in revenue in a quarter. Now they're doing 120. Like, you're telling me that they're not good at capital allocators? If you don't believe that they're going to monetize what they're spending, don't invest. Go short it. Have fun. Because maybe Alphabet falls in the short term. I've owned several stocks for more than a decade. I will own Google for more than a decade. And it can fall in the short term. Sure. I'm not playing the game of when I should invest. I'll just keep buying more because you know what? If Google fails, we have way bigger problems than one stock failing. Because that pretty much means the market's going to fail. End of story.
I think the thing that was most impressive, yes, I'm not going to downplay 80% growth year over year for Google Cloud, but the 200% plus ops profit growth was phenomenal. You saw margins expand from just under 21% to over, what was it, like 35% or something like that. It's insanity. So if you think about not just the growth on the top line, but also coupling that with margin expansion, it obviously ends up showing up massively in the bottom line. So I'm curious if you see comparable. I mean, we talked about this just last week, Steve, about Amazon's low net income margin comparatively to the rest. If AWS is able to see a similar expansion, I'm not exactly sure how good the margins are at AWS. You know, and I'm generally just letting it kind of do its thing. But if you're able to see a couple percentage points, that's going to be a large drag upwards for the total ops income of AWS, and they're the second largest in terms of revenue for cloud behind Azure. I think AWS is a larger market share holder, but I don't think that they charge nearly as much because they don't have as much enterprise tools as say Microsoft does. But anyway, I'm just kind of curious to see how this translate margin expansions, etc., into the rest of the companies that I own.
People are just being short-sighted. I mean, we know Amazon and Microsoft are going to increase CapEx next week. Likely we'll see Meta. So maybe big tech goes down. Fine. Maybe chips do better for a short duration. Fine. Whatever. I mean, ultimately these companies should do well, and I'm not worried about it. Let it go down. Doesn't matter to me at all.
Mr. Patel, how do you feel? I mean, you were a gentleman that just a few short years ago, you were talking about the spreads on Google and being able to buy. I think you were doing like 225, 275 spreads. Are you still holding on to those? Did you sell those?
No, I sold some. I sold them a little while ago. Not a long time ago, actually. Gotta keep recycling that. God damn it, just fill, man. I hate this. Like when you do leaps on like this stuff is just fill, man. I don't want to pay. Please. Sorry, just give me a minute. It's like pissing me off.
Chris is out there buying stuff, Matt. He's out there buying stuff.
This is like seriously pissing me off. Like,
I'm window
come on,
shopping
man.
myself. I get it.
Look at that. These guys trading. I love it.
Who's looking trading?
I don't know. I am in the mindset that I'll tell you,
Yes. Finally.
he got his spread, ladies and gentlemen.
Yes. Okay. Now I know where I can park this. All right. Good. Good. This is the thing, man. When you're trying to do spreads, like you have to nail the, because there's, especially if you're doing something with like low liquidity, you have to, sorry, give me 1 second.
Oh boy. Matt, I saw what you put. So I saw it. Hilarious. Hilarious.
Steve thinks I'm the help.
Steve thinks you're the what? The help?
Matt's so messed up.
Steve said I was the help. He said,
he's in a group text and he's making things up.
A group text?
Yeah, he's in a group text and he's making things up. That's why he's got that little smile on his face right now.
I can't just be myself.
Oh boy. So where do we think the market's going short term? Do we think that we're going to get a huge strike over the weekend because the market's closed? Do we think oil's actually going to follow today's trend downward? Do we think this is shaky ground for a little bit? And do we think the Fed is actually going to hike? Chris, what do you think?
I don't know, bro. I'm trading right now. Give me a minute.
Matt, what do you think? Chris is in the zone.
I will say, man, it's this increase in oil prices definitely put a damper on things.
Well, today it's down quite a bit.
What's quite a bit, Steve?
$4 or
Should
$5
I be worried for my job?
$4 or $5.
$4.
Yeah,
it's like 5%. I should be worried about my job.
Oh, stop it!
Start spreading. I don't know. I was really anticipating. You got me fired up, Steve. Like when oil was going below $60 or $80, and we were getting closer to 75 or below 75, even below 70. You started chirping about rate cuts, and rate cuts makes Matty happy. There's so many things that Matty could do with rate cuts, and for a long time I've been on this boat that keeping rates flat is probably better actually for the economy rather than, granted, yes, if we want to continue, but in terms of inflation and things like that, keeping rates where they're at, anticipating oil would be below $70, of course, I think actually is going to be more helpful for inflation. And I actually think that it's a reasonable area that we're in for interest rates. But from a selfish perspective, you got me fired up about these rate cuts, me wanting to refinance a bunch of stuff, and that these companies, specifically the hyperscalers that are borrowing, are going to be able to borrow at cheaper rates. And so they would probably load up, just like a lot of companies loaded up in 2020 and 2021 when things were quite cheap from an interest rate perspective. But now here we are again. So who knows? Maybe a rate cut is still potentially on the table towards the latter half of the year. But I think 2 cuts for the year is definitely out.
Okay. All right. Yeah, I don't know where oil is going to go. I think this weekend's going to say a lot. I think that the fact that Iran said no to the ceasefire agreement, I didn't even read what was on the agreement. I got to say, I think that this weekend's going to be a long weekend, and I don't know where we wake up with oil. Oil could be over 100 on Monday at the end of the day. It could also be 80. It's such a moving target right now.
I think the thing that's more scary right now is if I haven't seen how LNG facilities have picked up from our friends in Qatar and the exports there. But what I haven't looked at actually recently, I should check our boy Ron999 on X. He does a really good job of monitoring LNG supply worldwide. And if Europe hasn't necessarily started at this point refilling their gas reserves, then you could see potentially, and especially if this persists for another month or two, you could potentially have some big issues for European electricity prices towards the end of the year and going into early next, when things kind of hit the January, February timeframe. And the reason being is because you can only export so much at a time and refill so much at a time. So if you kind of miss the window and you're only exporting a certain amount, it's not like that there's a massive excess capacity out there that these guys can use. So, I mean, you've started to see, and this is the reason why VG and Next Decade started to run a little bit, and it's down a little bit today, probably because of a retracement in that and easing of these spreads. But yeah, I mean, the narrative is still alive with respect to spreads getting better. You know, just a short year ago, people were thinking that spreads were basically going to be nothing, and here we are, you know, dealing with almost double-digit spreads again.
So what do you think that means for the independents, not the super majors? Do you think the current environment is going to favor them? Do you think we see more consolidation? I mean, I don't think energy prices are staying this high, but do you think this is an environment where cash flows are strong enough that we see consolidation?
Independent oil and gas companies or LNG?
You know, independent, like Diamondback, that type of stuff.
Oh,
EQ2.
A lot of those guys hedge. And so, unfortunately, I don't think that they're going to be able to. I'm not exactly sure who's the most hedged. If anybody's curious, I mean, maybe that's a Chat GPT or Claude prompt to who is most available. But you have to think those are still U.S. producers. So even if you do have these massive spreads in Henry Hub to TTF or JKM, TTF being the title transfer facility in Europe and JKM being the Japanese Korean marker, it really still depends on what they're going to be able to sell for in the United States. And so I think if we continue to persist in, say, the long term, and you do actually start getting a lot of gas generators for some of these data centers, then there could be more of a balance. And especially as we have, you know, Venture Global and the Rio Grandes of the world come online in terms of export capacity, it's just going to put more strain on the local supply. And so you might see a lot more exporting, because if you have such a cheap feedstock, they're going to export it to where it's more expensive. And so you might see a little bit more demand internally in the US and actually bring up Henry Hub prices. So it could be beneficial towards the latter half of the decade, early next, as you have twofold: more power usage and grid usage in the US, and then two, more export capacity to export to Europe. Both are going to play important tailwinds, hopefully, on the price of Henry Hub. And I know a lot of people are hopefully, not hopefully, but they are banking on the fact that is going to happen.
Well, Matt, I am building out a global oil tracker. Would you like me to build out an LNG tracker also?
Specific to what, Steve? Where the boats are, or
whatever you would like that I can nerd out on, because I just built on Nowflation a global oil tracker, taking it from the EIA, and we're tracking world production, world consumption, the balance surplus deficit, where Brent is. We're tracking the ramping up month over month, who's pulling back month over month, production by country. Okay. We are also tracking OPEC crude versus non-OPEC, world inventory drawdowns, rig counts per major driller. We're also doing U.S. shale read, gasoline crack spread, refiner margin,
Look at that.
strategic petroleum reserve. We're also doing the inflation with Brent and CPI energy. So I'm building out everything. So if you want anything with LNG or nat gas, or if there's anything else that you think is good on oil that you would like, you let me know.
The thing that I'm very curious about, which I've been meaning to dig into, Steve, and it kind of correlates to the strategic petroleum reserve piece, is I know that the EIA is very good about reporting weekly what the U.S. reserves look like. I'm curious if there's other websites that do the same. Like, I don't know if S&P Global does it, or
so you're not talking about the strategic petroleum reserve. You're talking about just the country reserves for all drillers.
global. No, like, the strategic petroleum reserve is just U.S.
Yeah.
So it's like, who else, because that deficit, and it's going to play a huge piece. Like, if you have a deficit, let's just say of the 3 million, like you're showing right now, because of the Strait of Hormuz being closed, if you have 1 billion barrels like China does, I don't know if they do or not, but if you have 1 billion barrels to rely upon and you're at a deficit of a million barrels, you can go 3-4 years at 1 million barrel a day deficit before you're really in a shit situation, right?
So I'm going to make a note, and you know what I'm going to do? I'm going to try to build a global map of the strategic petroleum reserves for each country and have it color coded and do a whole bunch of crazy shit.
Yeah.
Okay. Global petroleum reserves by country.
No, I'm going to get hired by Steve's company.
Anything else you want, Matt?
One thing that might help people just in general is, and this is like an ambitious one, Steve.
Let's hear it.
So
I am token maxing right now, Matt.
yeah, I mean, you're token maxing. I mean, I can give you shit all day, which is one of the things I've wanted to do. You might only be able to get this information off of WoodMac. I don't know. But the different facilities of LNG facilities specifically around the world, they operate off of either contracted or spot pricing.
Mm-hmm.
And so understanding, once again, kind of who is at the mercy of these spot prices. Like, Cheniere isn't going to benefit nearly as much off of this current growth in margins between Henry Hub and TTF and JKM as like a Venture Global, because Venture Global right now is on a lot of spot pricing for commissioning and things like that in their newest facilities, versus a Cheniere, they have a lot of contracted volume. So the price could go to the spread could go to $200 a million cubic foot, and they'll benefit somewhat, but they won't benefit nearly to the extent of say a Venture Global, because the majority of their volume is already contracted. So knowing what LNG facilities are contracted or not, and what percentage might allow people to understand, like, maybe Exxon, the Golden Pass facility, I don't know the answer to this, is only 60% contracted because they were willing to fund enough. And the reason why some of these things get so contracted versus not is it allows the banks to underwrite the deals, right? So if you can guarantee 80-90% of the revenue, then you can get the money from the banks to be able to be like, okay, these guys do have the contracts in place for them to be able to pay back the debt at however many millions a year, etc. But if you're able to self-fund a lot of these things, like Venture Global is starting to self-fund a lot more, then you have the capacity to leave things on spot pricing, which can be a benefit or a negative, depending upon how the market looks like. Right now, it's obviously a very beneficial thing because Henry Hub is, $3 or less here in the United States, and you're able to sell it in Japan right now for closer to $20. So yes, you're gonna have to pay for fees, liquefaction, boats, etc. But you're still gonna manage a lot. Versus if you're contracted, you're kind of stuck, right? At the current price that you put into place, however long ago. So being able to see that not just in the U.S. but also in Australia and a lot of these other facilities worldwide, Mozambique, for example, might allow you to understand if prices do go haywire again and TTF or JKM goes to $30, $40, who the biggest beneficiaries could be. Maybe it's Exxon, maybe it's as the Mozambique facilities come online, could really start to see some benefit. And who owns those facilities, right? That's the sort of stuff that I'd be kind of looking at and curious.
I may need some more APIs to pull that off, but I will look into it, Matt.
Yeah. I
will look into it.
I just bought almost 800 contracts of Verizon spreads. I degened. I needed to degen a little bit.
Chris doesn't have to worry about money no more.
I had cash, so I needed to deploy.
He exits the service now, and
I didn't exit all of it.
I'm just saying you exited some of it, and instead of taking a little breather, gets right back to work. I love it.
Well, I mean, look, I just heard the three things that everyone wants to hear. Shareholder friendly. We're gonna do share buybacks, and that's gonna become a part of Verizon's capital return strategy going forward. Do you know how many times Verizon's bought back shares in the last 30 years?
Last 30?
Mm-hmm.
I can tell you last 10 real quick.
Go for it.
So last 10 buybacks. One time, sir. This year. One this year.
This is a low beta stock,
yeah.
Which means that its movements are, especially on the option side, the IV is piss poor, which means that now, even if the stock moves up slightly, and like I said, with the share buybacks plus a 6% dividend, that, by the way, the dividend grows over time. You're talking about 3 years of, number one, additional growth from the data centers, revenue that's going to be coming in from Google and everyone else. That's a plus. Okay. On top of it, all the share buybacks, their net leverage ratio now on their secured debt is below 2.2. So the debt isn't even a problem anymore. I mean, and they're strategically delevering by doing a bunch of, what are they called? Debt pay down offerings. What are they called? The open market offerings where they give you 50 cents on the dollar for the long dated debt. That's also a big plus. So you're looking at literally a deleveraging scenario. They just closed on Charter, so they're going to be adding a bunch of that cash flow into the mix. They're getting a high margin revenue from their MVNO partnerships. I mean, and they've got a stake in ASTS too, which means that they'll enjoy any equity upside. I mean, this thing getting to $60, and you want to know something? One last thing that no one really knows, but is there? Do you know what Dan Schulman's performance is based on?
55, 65, 75.
There you go.
Yeah, no, and it's over a 2-year period, not 5 or 10 years.
Yes, exactly. So there you go. I just bought myself 2 years worth of chilling.
You're basing your performance off of Schulman actually succeeding, which he very well may. I mean, they're going to.
He just got $1 billion out of Google. They didn't have $1 billion out of Google before.
With several billion more over the next 12 months.
Exactly. So once the market picks it up, this thing will be probably 50, and by then my spreads will be way in the money. So what do I care? And every dividend chasing asshole, if Fed starts to lower rates in 2027, 2028, is going to jump in. And one last thing, this hedges my portfolio where, let's say the market does go a downturn. What happens? What does everyone buy?
Income.
There you go. So, easy.
Yeah. And 184,000 postpaid phone ads this quarter, up 193,000 year over year. I mean, that's big. That's big.
Yeah, it's a return to growth, man. Return to growth. So, like I said, and the spreads that I have are way deep in the money, so I'm not worried.
Yeah.
Yeah.
Listen, I don't hate it. I think it's a good play.
Listen, I've made more money on Verizon than probably like this year. Look, take a look at this. When Verizon was trading lower, when it comes to low beta, this is like opportunities in low beta like this rarely come along. But check this out.
Math is mathing, everybody.
Where is it? Okay, Verizon.
Math is mathing.
Yeah, here, look. This is my position in Verizon. Like,
blurry, we can't say it.
I know.
You can just read it. We'll believe you.
I made 75,000, almost 156% up this year in Verizon on just my normal trading account. You just go right there. Come on, buddy.
Chris, you can just take a screenshot with your phone and just
there you go.
All right.
See? So evidence based.
56%. Yeah.
Year to date, I'm up almost 200K on this thing, so I'll take it.
Bill Ackman, aka Chris. I like it.
I wish I'd got in like 42, 43, but this actually just cements the deep. Like this is the kind of stuff that like it gets your juices flowing because like it confirms a thesis rather than trying to fight a thesis. Like I had this thesis last time, like I spoke about it on my Discord, like I just posted out there that they were probably going to try to monetize some of their data center assets. Now it's actually coming out and now they've got a partner in Google. So that's a pretty good, strong counterparty.
I mean,
$1 billion deal.
I would take that partnership any day.
Yeah.
And I will say this, when it comes to fiber, I strongly feel that satellites are not going to be able to really compete. And you brought up a great point. They need to be serviced and relaunched because they don't last more than 5 years or so with their shelf life. Fiber is pretty much forever. And it's very easy to fix fiber if something goes wrong. Not so easy to fix a satellite.
Yeah, the other thing with satellites also is that there's always like debris, space dust, and all these other things that can get in. And the thing is the technology, while proven at the V2 level, scale up is not going to be for at least another 5 years before they really like ramp up. And I think, like I said, I think the total addressable market for SpaceX can probably be like worldwide 100 million plus people, maybe even more. But in the United States, you're looking at an urban core where you're not going to have, like, first of all, like, how do you get satellite penetration through an urban core market? Like, even if you have all of these beams coming down. And then on top of it, you need to license all of the spectrum that Verizon and all of these guys, they pretty much own. So, you know, it is what it is.
I like it.
Yeah.
I like it. Well, I think we're going to wrap there. Thank you, everybody, for joining. Really appreciate it. I don't know what we're doing this weekend. Got no clue. Maybe we do something, maybe we don't. Any final words, Matt?
Just one day, I wish to be as good looking as Mr. Patel, and then 2, as wealthy as Mr. Patel.
There you go.
I'm not that wealthy. I don't know why you keep thinking I'm wealthy. I'm not.
The last name's Patel. You got that Guju money.
Doesn't matter, dude. I'm not a motel owning Patel. I mean, I have my brother owns a gas
we were
station.
talking about your people yesterday. Who was I talking about with? It was my barber. We were like chatting about like, they were like, what you really, we were talking about what my next ventures are. And he was like, what are you going to do next? And I was like, I don't know. I was like, I just need to park some money somewhere. He's like, you know what used to be dope back in like the 80s, 90s? He's like, they used to make these like 12 to 16 unit apartment buildings. He's like, and all the Patels would buy them and then just like make 2 of the units into one big unit, and then they would have the other 15 units just be printing money, and they would just live there. That's what we need to do, Chris. That's what we need to do.
Dude, I'm a new generation Patel. I don't do that work 18-hour day life. Like, that's my parents' generation. Like, that's the thing that people don't necessarily know, but every generation they put in and they do their commitments and everything else. But every generation, you know, like there was this thing I saw on Twitter. There's this Chinese girl, right? She was like, people don't understand the next generation of like Chinese food. It's going to become much, much harder because all the people that used to come from China to the US, they're not coming as much anymore. Like, the situation in China is good. And that generation that used to come here and open the cheap Chinese places in the corner, those people are getting old. All of their kids, they're either doctors, lawyers, engineers, like working in, you know, like higher like level jobs. You think they're going to be like, yeah, let me quit my, you know, $300,000-$400,000 job as a physician to open, you know, to run a Chinese like restaurant, like a corner one? No. So, like I said, every immigrant generation, they kind of evolve and they go to like that next level. And Indians and Asians and Chinese especially, that's exactly. Have you guys ever seen a homeless Chinese person?
I have no idea. I probably have, Chris.
I have never seen a homeless Chinese person. Never. Even New York City, never saw a homeless Chinese person. I saw the Chinese ladies picking up those like recycling cans. I'm sure you've seen those. Have you, Steven? Like around the city, like where they'll go through like the dumpsters,
Yes.
like they're all around.
Dude, that's a normal day for many people in New York, all right?
Well, I'm just saying, there was a lot of Asian ladies that used to do that, you know, but I don't see that like anymore.
Yeah, I think that's because of the volume. Believe it or not, you can probably make some good scratch doing that.
Wait, someone said that's a racist take. What do you mean a racist take? How is that a racist take?
You can.
That's what I observed.
Listen,
Chris, not that kind of Patel.
There's a lot of people that do that. I will tell you right now, especially in my area.
I did that. I did that as a kid.
With the amount of trash and the amount that gets thrown out, you see people of all it doesn't matter what race or nationality, like all people, doesn't matter. You'll see people walking around with shopping carts full of cans.
No homeless Chinese. I just haven't seen a homeless Chinese person. That's all I'm saying. That Asian, first of all, a lot of people that end up going into like homelessness and poverty and all of this stuff, I'm sure it happens, but I just haven't seen that among Chinese people or Asians in general. It's just not a thing.
I think we're interrupting Steve's token maxing.
What do you mean? Matt, I'm just trying to build for you, man. Make your life easier with energy. Put a natural gas thing in there for you. I'm going to work on some other things. Don't you worry.
But what I need to work on is not being down a couple M's, you know?
Well, you know, and you're the one calling Chris wealthy.
Tired of being broke.
Or is it because...
Chris thinks Chinese people are superior. No, I think that they have a very strong work ethic. I think one of the things is every immigrant group, when they come to this country, they come under the impression that their asses are going to work. My parents' generation worked. I know a lot of people, their parents' generation worked. And they all told us the same exact thing. I am working as hard as I am right now, so you don't have to. I want you to get that education. My parents went without a lot of things in life so that I had the opportunity to buy Verizon spreads.
So you could be token maximum, Steve.
I could be, or like Steven. Steven's parents worked his ass off so he can pay Claude to token max.
Listen, we're now dual maxing, okay? We're paying both OpenAI and Claude.
Yeah.
dual maxing.
Steve, are you buying next decade?
Not yet. Soon.
Buys everything else, but not.
Soon.
I get it.
I'm in Venture Global.
Okay.
I got one of the two.
What about Chenier?
I don't have Chenier. No. I don't have Chenier.
I feel like Chenier is probably going to be a good performer, but not necessarily that asymmetric return opportunity that like Venture Global could give you in 10 years, 15 years. You know what I mean? Like the amount of EBITDA that these guys are going to generate is insane. They're going to be the largest exporter of freaking natural gas in the United States. Talking about
Sometimes
the Exxon Mobil of nat gas.
Sometimes you don't need to be the largest to return the most.
That's true too, but
It's true.
like, next decade, I know is going to come back. So
Next decade is a $2 billion company right now.
yeah,
2. I think it'll be 25 to 30 billion when it's fully done. As long as they don't dilute the shit out of everybody.
do you know what I love about Venture Global? These guys are freaking relentless with their construction. You notice that, Matt? Like the speed at which they're putting these things up is crazy. It's
I'm
like,
curious, are they going to stick at like $40 billion worth of debt and just like keep building as fast as they can? Because like as soon as they're done this one, Chris, you already know this, so I'm just preaching to the room. As soon as they're done CP2, they're going to CP3. Like,
yeah,
they already have the land. Like,
I think, and this is just me like trying to hypothesize this. While they have a friendly regulatory environment, they are trying to get as many shovels in the ground as possible. Because you remember what happened a year and a half, 2 years ago? All of those projects, what happened? They all got put on hold because of the environmentalists, right? The thing is, you can reverse it. You can't reverse it after it's already done. So they're like, look, we have the opportunity right now. Even if it means we got to go into a little bit of debt, let's build out as much as we can while the Trump administration is here. And then once the Trump admin is gone, if it's a Democrat, that's 8 years worth of no additional trains that are going to be allowed to come on, because all of them are going to be like, no, we're not going to do permitting. We're not going to do this. And what do you do then? And what happens is, I mean, I don't know if you guys know this. Do you know who the largest contributor to the Democrat Party is in Texas?
No clue.
Oil and natural gas.
That makes sense.
no.
That make a lot of sense.
If you, the reason why, like, I know that people will say, well, the energy friendly policies are coming from the Republicans. That is true. But if you're a wildcatter, you want a Republican. But if you're like an established infrastructure player with already proven acreage and you do not want additional competition, who do you want? You want the slow, you want the Democrats who are basically like, oh no, we can't do this and we can't do that and we can't do additional things. And so this way you get like this massive level of incumbency. So if I had to guess, I would say right now you're looking at Venture Global just putting up as much as possible. And then by 2028, they might even start Delta again. That's what I've been hearing.
Yeah, I'm kind of curious when that's going to come on the table. I mean, I think that the reason why they're not doing it is because of the bolt-on activity that you can do. I mean, we talked about this at length. But for anybody else that's listening that's unfamiliar, Delta was a fifth location that was kind of the farthest east, kind of not close to New Orleans, but closer to New Orleans, in Louisiana. And just a different site compared to Plaquemine, CP2, CP1, CP3, etc. So just a different location. Also is going to be quite large, if I remember correctly. But I think because they started getting Plaquemines and CP2 online so quickly, I think that they paused Delta because the bolt-on not the bolt-on acquisition. It's the bolt-on of the existing infrastructure. You think you don't have to build more tanks, you don't have to do it. You're able to just liquefy more. Doing that at Plaquemines and CP2 is one, faster, two, lower CapEx, and so your export margins are going to be much better.
Yeah. The reason why they canceled it is because they canceled this in June of 2025. And they didn't really cancel it. They just withdrew their application for it. And the reason why is because they just saw that there was going to be, quote unquote, a glut of LNG that was going to be coming to the market. Well, guess what just happened? Strait of Hormuz is now all in question. Now every single supplier on the planet is saying one thing. We need to diversify our sources. So I feel really bad for the Qataris because the Qataris are kind of screwed because of this, because everyone in Asia used to get their LNG from Qatar, and Qatar was such a reliable partner that it made no sense to try. Like, you didn't have to diversify. It was like, Qatar's got your back. Don't worry about it. Now everyone's like, Qatar's there. You got the Iranians, and they could close the strait at any time. Like, the whole paradigm around the strait closure just changed the trajectory of Venture Global, in my opinion, long term. Because now you don't know if Qatar can be that reliable source anymore. And the Qataris sort of know this too. And I think that's why, Matt, these guys have actually been like throwing money all over the US when it comes to their projects. You know?
Yeah, and I want to, this is one of the things that I always want to caution people is like people in the chat can just chirp up about things that they don't necessarily know about. And unfortunately, the result of that is sometimes they can convey misinformation or untruths, whether that they're either don't necessarily have the in-depth knowledge of it, or they comprehend something to a certain degree, but they don't necessarily know everything. So they might, unfortunately, be misinforming people. In a lot of cases for LNG, meaning Cheniere, Venture Global, even Next Decade, a lot of these contracts are set in place and are actually contracted. Henry Hub could go to $100 an MCF, and unfortunately, that might still require all these companies that have signed all these contracts to still be putting gas through Next Decade, the Rio Grande facility. It might require them to still do CP1, CP2. And the reason being is because when you set up those contracts, you're actually setting up what your liquefaction fees are and your margins are out in time, which is why the banks are so key on having some of these contracts in place so that you can guarantee that revenue stream. The only impact is if you don't have the contract set up on some of that capacity, which is spot pricing. But even still, if gas, which is the most prolific of the fuel sources within the United States, goes to $100 an MCF, unless regulatory around the world changes, then it's going to be north of 100 elsewhere as well. Like Europe, they continue to drill less and less. The North Sea regulatory environment, no bueno, right? There's so little drilling comparatively to so much sources. And then Australia is the same. The regulatory environment is very tough in Australia right now to get any new drills out there. The exploration is at a multi-decade low, although there has been some movement in that sector. So you're thinking about these massive sources of fuel that have been around for decades, unfortunately not being backfilled to the extent that they should be. So that relies more on U.S. natural gas being a primary source. So if the United States has a plethora of natural gas, which is why gas here is less than $3 comparatively to over 15 everywhere else in the world, except for some local regions, Middle East, etc. But I'm talking about, Europe and places where they import this stuff, right? Korea, Japan, Europe. Then, yeah, unless things change, the price is going to go up there as well. But I think what you need to recognize is there's a difference between contracted and spot pricing. And spot pricing, yeah, there could definitely be a contraction in margins and things like that. But if you're contracted, you're not even necessarily caring what Henry Hub price is versus TTF or JKM, because you're contracted and you're strictly making money generally on the liquefaction fees at that point.
The smartest ones of the bunch, in my opinion, the Asian buyers, is the damn Japanese and the Koreans. The Koreans, they bought a whole bunch of equity stakes in the buyers. their logic is very simple. Okay, if you are going to contract with these guys are going to throw off dividends from profits, right? So what happens? You invest the money today. When you pay, let's say next decade for that natural gas that liquefied, they pay you back a dividend. And the dividend on the yield basis is like crazy high if you go out 10, 15 years. So their logic is we better invest in it today so that this way we get this massive discount in the future. So it's crazy that you wouldn't see a lot of these sovereign wealth funds buy into a lot of, and that's the other thing too. A lot of these sovereign wealth funds, they bought into the LNG, liquefiers, because they understand that in the future we're going to need natural gas for our defense industry. And so let me just show everyone what I'm talking about real quick. I mean, like I said, these guys think way out in advance, and I wish the Europeans would do similar things, but it just Europe is just
Chris,
Europe.
that allows us to buy it all, or as much as we can. And Steve, for us to wait for another opportunity to say, Matt was talking to us about it when it was Y, and I was a shook baby, and was too cool to buy it, and I'm token maxing, so I'm ignoring Matt. And
no, I'm bringing Chris's thing up. I heard you. I'm a shook baby. Matt and Chris are buying all of it. I'm listening to you, Matt. Don't do that.
Look, this is next decade. Okay,
I'm
next decade.
Steve.
You're so messed up.
Next decade, right here, right? Do you know one of the largest buyers of next decade stock has been over the last like 7 months? It's been Hanwha Aerospace. Hanwha Aerospace is like, even though Hanwha it's a conglomerate out of Korea. The thing is, these guys are one of the largest consumers of natural gas in Korea. So their logic is very sound. They pay a few $1 billion, not even a few billion, a few million, 100 million here, buy up the shares. What happens in the future? The stock goes up as this thing scales up. They eventually throw off a dividend. They collect the dividend, and basically they're chilling on free natural gas. Not free, but really cheap natural gas. I mean, this is the kind of logic that you want to see more people use, man, in the market, especially with energy. Like secure your energy while it's cheap.
That's insane. They have gotten to 10%.
Yeah, they got 25 million shares right now. Like if you look at the Venture Global's equity partners, what do you call it? Not venture. Let's do next decade's.
Steve's been waiting for a girl like you.
This thing's gonna also be another massive thing, man. Look at this.
Yeah, it's gonna be 60 MTPA by the end of it.
Really?
When is that? 31?
No, it'll be 35.
35.
Yeah. It's they're gonna ramp, but it's gonna be a long ramp. Right here, look at this. These are their LNG customers, but more importantly, their equity partners. Who are their largest equity partners? GIC. I think that's the Singaporeans, right? You've got Mubadala. I think that's Saudi Arabia. Is it Saudi Arabia?
It's UAE.
UAE. And at least the French were smart enough to be in this, but not to the same degree as these other guys. So, ADNOC, even though ADNOC is one of the largest exporters, they're like, hey, listen, we might as well sign this deal right now because we can resell this. NG does reselling also, right, Matt?
You know who? I forget who it was. It might have been Mubadala that sold out partly, Chris. But guess who bought in?
No, who?
Aramco.
Really?
Yeah, I'm pretty certain.
Yeah.
What was the Aramco purchase for next decade? Yeah, I think they either bought part of their. Yeah, there you go. Yeah. Aramco, right there. Train 4.
Where is it? Oh, Train 4. Yeah, Aramco.
Oh, that's just a counterparty. Hold on, let me see. What did they bought?
Yeah, I don't think they're gonna sell a lot of equity stakes in probably the further trains out, man. All of
Yeah,
that
that's where the
sweet,
real
sweet
money's
money.
at.
Sweet,
Potentially.
sweet cash flow, baby. Sweet, sweet cash flow. That's the one thing Venture Global does have, that they own everything. They don't have equity partners in any of their shit. They're like, nope, we're keeping all of this for ourselves. But they do have a lot of debt. Like, that's one of the challenges that VG is dealing with. I don't want to call it a challenge. It's just VG.
No, you're right. That was a lie, guys. I didn't. Sorry for the misinformation. Saudi Aramco is just a purchaser of gas on Train 4. They didn't actually. But ADNOC owns about 12%. Total owns about 17.5% of the company.
Yeah.
So
The thing I like about these guys is that they're vertically integrated too, because it's one thing to own the facility. These guys own the ships. They own the entire thing. So their thing is, we're going to deliver the LNG to the site, and they're going to be able to make money on everything. But they do have a lot of debt. So the one good thing is that if interest rates come down, Venture Global is going to benefit significantly more, because that means that future financing costs are going to come down significantly from refinancing. And they already started paying a dividend, which I think their capital return structure, Matt, is probably going to be more dividend heavy than buybacks. What do you think?
I think for right now, they're just getting the dividend as just to start the clock. I think you and I have talked about this at length, but I think where they're at is they don't want to necessarily pay down all the debt, because if their return on equity is north of 25%, if you're able to borrow at 6, 7, 8% and then be able to make 25% on whatever it doesn't make sense necessarily. So I think that they're just trying to balance a debt to EBITDA that allows them to be premier investment grade. And then whatever that is, they'll either try to continue to refinance the debt or balance the rest of that with either some buybacks or dividends. But I don't know. I'm not really necessarily concentrating on it as much. I'm trying to watch the EBITDA. The EBITDA is exploding over the past 2 to 3 years, and so I'm kind of curious when some of these facilities are online and hit the CODs rather than just commissioning. I'm trying to understand how much actual EBITDA they're going to be generating, and then how much debt pay down they have. So I don't know.
It's interesting, because I remember the same discussion 2 years ago. Everyone was scared, like, oh, who's going to sign with them because of the whole issue that they had during, the initial Russia-Ukraine war situation. They don't have a single issue getting their gas sold. Look at this, all of these 20-year deals. I know that they made a few 10-year deals too.
Yeah.
But yeah, this thing is going to so this is just so everyone sees. This is Qatar, the largest liquefaction company on the planet, Qatar Energy. This is Venture Global. This is where they are now. This is what's under construction, and this is what's bolt on. And this is all probably before like 2032. So they're going to be bigger than Qatar is right now. And Qatar, this right here, we don't know when this is going to come back online again.
And the thing with VG is that doesn't include CP3 there. Or Delta.
Yeah. Yeah, CP3 is going to be another monster freaking facility.
I think CP3 is going to be 30 MTPA on its own nameplate. So actuality, it'll probably be closer to 40.
Yeah, Venture Global. So this right here. Right here.
Steve Wayne.
Yeah, and they've already got all the regulatory stuff out of the way, I think. I don't think they have anything else. Yeah, application. All right, well, that's enough talking about VG.
You guys are making me more bullish on it. Glad I own it.
I mean, this is the kind of company you want to buy and give to your grandkids because
kind of tuck
they're
away.
Gonna be,
yeah.
Because, I mean, the way that dividends work, and I used to think a lot of people just purely buy a company just for the dividend itself, right? But the mindset that I have now is that you're also buying future dividend growth as well. So just let's say right now you buy a dividend paying stock that's giving you a 5% dividend, but it's always increasing its dividend by 10% every year. That means that, you're paying, let's say you're getting $5 right now for it, like 5%. The next year after that, you're getting 5.5, but your cost basis was that original amount that you put in. Now, if you extend that out 20 years, you're looking at literally on your original shares, sometimes a meaningful like 30, 40, 50% return. Like there are
people look at current yield rather than yield on cost. That's the problem.
Well, yield on cost can be a trap to an extent as well, but
sure.
That's true too.
But at the same time, I was talking about McDonald's the other day, and everybody's like, why would you want to buy that? I'm like, well, when did we go to a world where people do not want to reward companies that compound earnings and grow the dividend for 49 consecutive years with a 5-year dividend growth rate of 7.5%?
No, I hear you.
Like, they're about to become a dividend king. There's like 20 companies in the world that are dividend kings. Maybe 25, very select companies, 2.83% dividend, yet McDonald's trades at 20 times earnings. To me, they should have a bigger, forget the growth. This is a bellwether. It should have a bigger market cap. You compound earnings for as long as McDonald's did, and you grow the dividend every year for 49 years. This deserves a premium. I mean, you think about their profitability, it's insane.
I just want to let you know those guys that are driving Lambos and like those Monaco videos with those old people that have like the young, hot, like Russian hookers in their arms. Most of those guys are like dividend monsters. Dude, they're literally like, yeah.
Look at where we were in the 70s and 80s with splits. And I get it. Berkshire Hathaway never split its stock. Cool story. How many people actually trade shares of Berk A? I mean, McDonald's, 1, 2, 3, 4 splits in the 70s. You got 1, 2, 3, 4, 5 in the 80s, and then another 2 in the 90s, and they haven't split it since then. When did splitting shares become a bad thing? When?
Never.
It doesn't change the market cap. It changes the entry price in the shares. That's it.
Yeah.
I wish more companies would do stock splits. Like, Chris, you got to see this. Cisco, oh my God. Their splits were so wild back in the day.
You know who I think needs to split? Freaking Mercado Libre, man. Mercado Libre always has these $1,000 plus things. So I'm like, you can't do any options on this thing without paying a crazy amount per contract.
If you had bought one share of Cisco in 1990, okay, they did from 1990 to 2001, 2 for 1, 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 1.5, 1.5, 2 and 2. Think about how crazy that is on a share count basis. Like, when did that go out of style? I don't get it. Zuck needs
someone said stereotype racist financial podcast. Come on, guys, it's just me. All right. I don't understand. You can't even. Is it racist? Is it racist to speak positively about another race?
No, I don't know.
Steve doesn't want to happen.
I think black people are good at basketball.
Oh God, here we go.
All right,
is that racist? I'm just saying, is that racist? Please tell me, is that racist?
Let's not go down this road.
I hate the fact that like everything is racist. Even a compliment is racist. Like Asians work hard. Okay, like how is that racist? Please, someone please. I'm just saying for education purposes. Educate me on how I need to be less racist by basically complimenting a great trait that a specific race has.
I don't know if it's necessarily racist. It's definitely stereotyping.
Dude, give me that stereotype all day. Indian people, you guys are, like, don't say anything bad. I think that's the part, those stereotypes that I think are hurtful, But I don't know. I always found the good stereotypes to be noteworthy. If anything, you should probably lean into that. You're like, yeah, we're good at math. Thank you. Like Indian people are good at spelling bees. Not anymore. Not my generation.
I can tell you that. I suck at it.
We got to get Steve a Urus, Lamborghini Urus.
Nah, man, he can't park that anywhere in New York. Mamdami come and confiscate that shit. He lives in the caliphate now, man.
Oh, no bueno.
Are you good?
All right, everyone.
Steve, you gotta go to Friday prayer. Is that what it is?
Good luck with that.
Ugh.
All right, gonna get out of here. Gonna get some lunch. Thank you, Matt. Thank you, Chris, for coming on. Please go follow Chris and Matt. I have a video coming out at 2:45 with Brad Thomas discussing real estate and data center infrastructure. If you're interested, and we'll be back at some point. Thank you, everybody. Really appreciate it.
See you later, fellow racist. See you later, fellow racists.